Guys,
Hello friends, Sumit this side. There are 39 people who have joined along with me. There are 40. So I wish you all a great evening.
Hello,
And
thank you.
thank you. And let's
Good evening,
start
sir.
the session.
thank you, sir.
Good evening.
sir.
Good evening,
Good
sir.
evening. Good evening, my dear
Good
friends.
evening, sir.
Good evening. So let's start. Okay. My screen is visible to you guys, right?
Yes.
Yeah.
Yes.
Yes, Dixit, my voice was not audible earlier because I was not speaking, honestly. I was just waiting for more people to join. And just confirm, Dixit, now is it audible to you or not?
Yes, Sumit, you are.
Thank you for the confirmation. Yeah. So in our last session, we had understood various functions of investment bank from the side of institutions, right? That what are the various institutional services which investment banks give as a part of their corporate client services, you can say, right? So investment banks are specialized financial institutions in arranging and raising capital. Basically, what we talk about is corporate financing and mainly operating financial markets. So we talked about various services from one side of the investment banking services, that is corporate financing solution and executions, right, to their corporate clients, which covers all types of corporates. It can be a manufacturing company, it can be a services company, it can be technology, municipal, financial company, any kind of new age technology company, any kind of company. It provides corporate solutions to them. And what are those corporate solutions? One is corporate financing solutions and executions, helps in raising capital in the form of equity, debt, or hybrid. Also, we talked about the issuance of capital. It can be done privately to QIBs or selected institutions or investors, and it can be in the form of public issue placement, where the issues are to the general public, including investment banks, institutions, retail investors, cash-rich corporates, and all. And right issue placement is only to the securities are only issued to the investors who are already a shareholder into that company, right? That was as a part of corporate first corporate solution, which is corporate financing solution and execution. Second function is corporate restructure organization solution, which is merger, demerger, acquisition, joint venture, divestment, privatization, spin-off, right? In case of all of this, IB plays an important role, and we discussed about that. The third solution provided by IB is corporate risk management solutions with respect to there are many risks which any organization can face. That is bond price risk, commodity price risk, currency rate risk, currency fluctuation risk, interest rate risk, and investment bank can create tailor-made solution for the corporates to manage this risk or to hedge these risks. Largely, those solutions would be in the form of derivatives, and we are going to talk detail in each type of derivatives as a part of this course, but later. Then we talked about corporate strategic advisory solutions or services, which is advisory with respect to capital restructuring, internationalization of business, expanding the business, compressing the business, diversifying the business, or any tax related issues which business is grappling with. Investment bank can provide the advices. So those all are from the perspective of corporate solutions. Now we would look for investor solutions or investment solutions or solutions provided to the institutions which are categorized as investors. And we first, before looking into the kind of services which an investment bank provide to this institutional investors, we first understood what are the various types of institutional investors we have. And we touched upon 12 different types of institutional investor. One is asset management company. Another is provident fund organization. Third is banking companies. Fourth, insurance companies. Fifth, NBFC. Sixth, sovereign wealth fund. I gave some example of sovereign wealth fund. I give an example of endowment fund. Then trust, foundation, societies, other security brokers and dealers who can work as their clients to your investment bank. Cash-rich corporates, central banks, wealth management companies. So all of these can be can play, because they might sit on a lot of cash and they need investment solutions or advisory solutions, and investment bank can provide investment services to their institutional clients. So what are those kind of investment solutions which bank can provide? That is something we are going to discuss today to start. Yeah, so that was a quick recap of what we had done with respect to investment. Other than that, also we had look at other functions of financial market, but that is fine. But investment bank is important, so that is why I touched upon first leg of these services, which are corporate solutions by investment bank. Now we are going to talk about the second leg, which is investment solutions provided to institutional clients. Please note that investment bank provides services only to institutional clients and at max HNIs, but not to retail. For retail clients like you and me, we do not have to go to investment bank for financial solutions. We need to go to brokerage companies if we need to trade into securities and all, like Zerodha and all. So what Zerodha can do for an individual retail client, similarly, an investment bank can do the same work for institutional clients, for helping them buying and selling, as well as helping them in providing research ideas and research services, right? So those services we are going to talk about. So as a part of institutional services, investment services to institutions, the first type of service which investment bank can provide is research services. When we talk about research services, it can be with respect to fundamental equity research, fundamental analysis, technical analysis, like seeing the charts and giving ideas that yes, you can invest into here and here and here and here. Currency research, if your client wants to deal in currencies. Commodities research, if your client wants to deal into commodities. Sector industry research, industry level, macro level research. Economy level research. Market research, general market research. So any kind of research services your client wants, or institutional client wants, investment bank can offer those research services. Again, equity research services, fundamental analysis of any company, technical analysis of any company, commodity research, currency research, sector and industry, that is macro level research, economic level research, and general market research. So these are the kind of services which can be provided. Just a second, I got a message. Yeah. Any questions so far? I guess each of these services or something. By the way, guys, these days, if you go to YouTube, there are many people who provide these kind of services to retail for free. We think it is for free, but honestly, it is not free. So, for example, I'd like to share this article with you and just read this article. It's very interesting. I was reading it, and I'm not against any financial influencers which are there on YouTube. Again, someday I would also like to do something like this. But what I'm trying to say is that on the name of financial influencers, which claims to give a lot of equity research ideas based on their research to investors, may be something which not actually be the right thing to look forward to, and they might be doing something really bad, or more bad than more good to you. So there's this article which has come on this platform, The Can. It's a very good platform to read. And as I told you and promised in the first session, that as and when we will be studying things, I would keep sharing the things where one can look forward to read. So one of this good article, but this is a paid subscription based reading platform, but it also has some articles every month which come for free. And then those which are free can be read by anyone going on this platform. And but 70% of all articles comes only for the people who are subscribed to that. So I'm a subscriber to this service. They charge somewhere around 6,000 to 9,000. I forgot. It increased this year. It is 9,000 or something. But yeah. But there is this article which they has written, and okay, the gist of it. So you might have come across these platforms. I'll just. Can someone of you confirm that if you have seen any of their videos on YouTube?
Yes, sir.
Yeah,
Yes,
Sumit,
sir.
I have seen.
right? So many of these are very popular, right? So let me show you. So this is what's interesting, and since a lot of people are getting influenced, see, not all are bad, honestly, but there are few who can be very dangerous for your portfolio if you really take the advice, because they may result into a lot of waste of money for you. Uh, just give me a second. So the gist of this article is there in the email. This article is good to read. You can read the long, but they provide a gist of it on the email. See. So they have given an example. See, 4 hotshot YouTube influencers who promoted a company called Vault. What is the name of the company? Vault. In the past are P.R. Sundar, Ankur Wariku, Akshat Srivastava, and Booming Bulls. And this is how it looks like, right? All of these had promoted Vault, right? And what happens to this company Vault? This is just one thing. So these 4 are among the so-called influencers or financial influencers who have sprung up over the past few years in the stock market's bull run. They dole out knowledge and advice on everything finance, from buying stocks to buying onions. They have rockstar status on YouTube with millions of followers, and everything was hunky-dory until, well, it wasn't. The replies to the tweet highlight the public discourse. One points out that these influencers run paid promotions in some cases, but issue only blink and you will miss a disclosure if they do at all. So most of the time you think that you are watching these videos for free, but you are watching it for free, but they are not doing it for free. They are getting paid by the company which they are promoting. So one point out these influencers run paid promotions in some cases, but issues only this. This is done right. Another defends them, arguing Jesse Praja Vesa Raja, the king is like their subjects. Problem is YouTube learners interested in fin entertainment and short-term thrills. There are some blanket allegations. I'm sure all of them would have been tipped off before the public announcement, and now I feel this was pre-planned by Vault CEO. Vault, you'll just read about Vault, what happened with Vault. Vault is a company, and what happened with Vault, you just read about it. And each of them were actually promoting Vault. So just need to be very careful, guys, how people who have invested or who use the services of a Vault. Earlier this month, Vault, a crypto lending startup, suspended operations, withdrawals, trading, and deposits. It blamed financial challenges after a run on withdrawals amid the crypto sell-off. What that says about digital currency story of for another day. Right now, we need to understand all of these 4 influencers promoted Vault as a place to deposit your money. And now see what happened to Vault. Vault is gone out of the market, just suspended its by everything, not trading, deposits, every activity. And those who have, invested their money rather than investing into fixed deposit or anything else, was comparing. You can earn 12.68% in investing your money in Vault, and as compared to FDs. Now just look at what has happened to this. The Vault has just run away and stopped doing everything, right? So it can be very dangerous, of really going through this. And it's a great article. Do read about it. And some of them are really good, honestly. Not everyone is good. So this article will talk about both the side, good side and the bad side. I'm just telling you the bad side of it. So equity research is, guys, these days it's coming for free on YouTube, but don't think that's an equity research. So I'm not talking about that equity research, but I'm talking about the equity research which would be provided by dedicated research analysts of the investment banks to institutions, and these institutions will pay fee to doing all of these services, research services to investment. Second service which can be provided by an investment bank to institutional clients, again, not to retail clients, to institutional clients, is broking services. That means what Zerodha can do for you is the same thing what investment bank will do for the institutional client, that they will help the institutional client to buy and sell securities on exchanges. Because you as an individual or institutional client directly cannot go to an exchange and buy securities. You need to go through the route of brokers or trading members. Only trading members and brokers can buy and sell securities. So investment banks can be that broker. So investment bank can act as a broker for their institutional clients because they have an exchange brokership and trading license with them. So most of the investment bankers are trading members. They have proper licenses with the stock exchanges, which enables them to buy and sell on behalf of their clients on stock exchanges. So they can provide you broking services. They can provide dealer services, So what is dealer services? So let's first look at there are two kinds of markets, guys. One is called as exchange. Another one is called as OTC market. So what is the difference between exchange and OTC market? OTC markets are also known as over-the-counter market. On exchange, trade happens through a middle party. So a representative of buyer will come to that exchange, a representative of seller will come to the exchange, they will meet at the same place and they will enter into a deal. On OTC market, which is considered as an unorganized place, which is considered to be an unorganized place, direct trade can happen between two parties. These trades may involve a broker, may not involve a broker. A broker is not necessary to be part of this. See, I don't know Chandrasekhar. See, guys, there's a one-to-one message doesn't work, Chandrasekhar. If you have any question, you just write on chat so that others can also. Is this your first session, Chandrasekhar? Now, please unmute and talk. Chandrasekhar.
Yes, sir.
This is the first session, right? Chandrasekhar,
Yes.
there's no direct messages. You don't need of direct messages. You can write things on chat. You can get messages.
Sure.
Okay.
Okay.
And second is Chandrasekhar here is asking guys that is there any WhatsApp group for the batch? Is there any WhatsApp group, guys?
Yes, sir.
Yes, sir.
Yes, sir. It
So
is.
can anyone share the link of WhatsApp group with Chandrasekhar? Can anybody share so that by clicking on the link, Chandrasekhar can join that?
So the
group?
officials will provide the link for that.
So Chandrasekhar, check with coordinator. They will provide you the link. You can clicking
sure,
on that link, you can be part of it. But there is a WhatsApp group as confirmed by all, right?
Okay.
Yeah. Okay. And welcome you, by the way, Chandrasekhar.
Yeah,
I
thank
saw
you,
your
sir.
name. It seems that I didn't interact with you. That's why I realized you are new to that.
Yeah.
Okay. Coming back to unorganized place. Unorganized place, and Chandrasekhar, with me is very easy. Don't write anything on message. In fact, you can unmute and talk. That's how we.
Yeah,
the
definitely.
Okay.
Yeah. Actually, I don't know all the forums.
but ठीक है, but
So
होता क्या है
yeah,
कि
I'll keep in mind. Yeah.
हाँ, वो होता क्या है? What happens? It's not your fault. I'm just saying because you are also first time session. What happens that my rhythm gets break, right? My rhythm breaks and it just comes as a pop up, and I really don't like breaking my rhythm. ठीक है. Chalo, unorganized place. Yeah, unorganized place or OTC market, you can assume it as a market where direct trade can happen between two parties without the help of a broker. Broker may be involved, may not be involved, but these are of the exchange transaction. This transaction doesn't happen on the exchange. This happens over the counter. Exchanges are part of it. It's a direct trade between two parties. And because it's a direct trade between two parties, it has its own inherent risk. We'll talk about those risks, but it has its own inherent risk. That is one. Second, I'm sure you guys need to understand one more thing. The difference between primary market and secondary market. That is also very important because when we are talking about organized place, unorganized place, stock exchanges, OTC market, you need to understand what is the need of it, what is the utility of it, see, when the securities are issued for the very first time by the companies, right? It is called as issuance of the securities for the very first time. It is called as IPO or FPO, initial public offer. FPO is follow-on public offer. when new securities are created and issued for the very first time by the company or the seller to the market, where investors, individual, institutional, HNI, whosoever it is, can come and buy it by directly subscribing to it. It is called as primary market issuance. Now, once the securities gets issued in the primary market, then they get listed on the exchanges. If they get listed on the exchanges, the trading on those securities is started, where one investor is trading with another investor. So a company issues security in the primary market, then an investor buys it from the primary market, and then that investor go to secondary market and sell those securities not to the company but to some other investor. So trading happens between investors in secondary market. So primary market, Nehal, is the place where securities are issued for the first time from company to investors. Okay. Secondary market is the place where one investor is trading with another investor by selling the security or buying the security from another investor. Company is not involved at all. Issuer is not involved at all. For example, if you want to buy the shares of Maruti, you go to the stock market, you buy the shares of Maruti. Who is selling you? Company is not selling you. If you think that I want to buy Maruti shares, I will go to Maruti's head office and they will demand the shares. No. You will go to the stock market where another seller, because right, you want to buy the shares. Similarly, there might be some person who's holding the shares who want to sell the shares. So you both will meet. Both are categorized as investors only. One is buying the shares, another one is selling the shares. Company is nowhere involved in this transaction. This transaction is a secondary market transaction. Is it clear now?
One more question, Sumit. So, yeah. First time whenever IPOs
it is a primary market transaction where company is involved with investor. One party is company. Issuer is for one party, another party is investor. In secondary market, both the parties are investors. Issuer has nothing to do. Yeah, please go ahead with your question.
Okay. I just wanted to know about difference between IPO and FPO.
IPO and FPO is, see, both are issuance of securities, fresh securities to the market. But when a company which is already listed on the market comes up with further fresh issuance of securities, it is called as FPO. So, for example, Zomato. Zomato first time came to the market last year and issued securities, right? Last year or last year, whatever it is, but you can check the date. I guess it was 2020 end or 2021 beginning, whenever. It came for the issuance of the securities for the first time. It issued securities to the general public. It was IPO. Now, second time, again, if Zomato wants to issue more new shares, but it will be issuance of new shares, not existing shares, issuance of new shares. Then it will be called as FPO when it comes to the market again and issues those securities. So fresh securities are issued. When fresh securities are issued for the very first time, it is called as IPO. When fresh securities are issued for the second time, third time, fourth time, it is FPO.
Okay. Thank you so much.
Right? But when trading is happening between the existing investors in the existing securities, no fresh securities is involved. Existing securities is getting traded between two parties and both the parties are categorized as investor. No issuer is part of it, right?
Okay.
That is secondary market. Okay. Now, secondary market, Nehal, can be an organized place or inorganized place. If it is organized place, it is called a stock exchange. It is called as what?
Stock exchange.
A stock exchange. It is an organized market, right? Okay. There is called as unorganized market, which is called as OTC market. It is called as what? Over-the-counter market. It's called as what? OTC market, over-the-counter market. In organized place, Nehal, if you want to trade, you need to go to a broker, like Zerodha, right? Zerodha will get the deal for you on exchange. Prices of that security is going up and down every second. You can see the transaction happening every second during the market open time, that is 9:15 to 3:30 in our country. Okay?
Right. Okay.
But But if you go to unorganized market, you don't need a broker. It is your wish. You want to go with the route of broker or not a broker, but you don't need a broker. But you will have to find the seller your own.
Okay.
Here the seller will already be available. One side of the exchange in the organized place, one side of the exchange, there would be a buyer. Right? Here there is a buyer. And on the other side of the exchange, there is a broker. And both buyers and brokers are sitting on this exchange. These days, virtual. During 1990s, it was not virtually, it was physical. Nowadays, it is virtual. Okay. But both the parties stand on the exchange and it is organized. Here in the OTC market, if you have wish to sell the shares, you have to find the buyers, your own. Go door to door. भाई साहब आप शेयर बेचना चाहते हो क्या? Sir, would you like to sell your shares? Hello, sir. Do you want to sell the shares? You go to one house to another house to another house to another house to another house. Keeps on going till you buy a buyer. Till you find a buyer. It is an organized place. OTC. Two parties come together without the involvement of any mediator. Or maybe there is a mediator, but not an exchange, not a market. Not a market. It can be a broker, yes, but not a market where both the parties are standing at the same. It's not right. Direct trade can happen between two parties. So, for example, Nehal, you and me want to trade in mobile, buying and selling. So, forget mobile securities. For example, you and me. For example, if you have the shares of Flipkart. For example, you have the shares of Flipkart. You were employees of company called Flipkart. You know the company Flipkart, right?
Yes.
You were employee of Flipkart. Flipkart issued you and as e-shops. It issued 1,000 shares. How many shares?
1,000.
If you want to sell the shares, tell me how can you sell the shares? As compared to if you were an employee of Zomato and you want to sell the shares. You got ESOPs from the company, you want to sell the share. Tell me, how would you sell the shares if you are an employee of Zomato? And how would you sell the shares if you are an employee of Flipkart? Tell me.
So Zomato is listed on the market. So Zomato shares.
So you can go to an organized market, stock exchange, and you can sell it. NSE or BSE both where it is traded. You can simply go and sell the share. Okay, tell me what about Flipkart?
And if Flipkart, I'm assuming it's not listed. So
it's not listed.
So I need to find on my own who wants to buy.
So these days you might not go to physically door to door to places, but you may have many groups on WhatsApp. Hey, I want to sell my these shares. I have 1,000 shares. I want to sell this share. And like this, you have to find out buyers, maybe on Facebook or whatever channels you want to deploy. Or maybe you appoint a broker. But even if you appoint a broker will have to use the same way. For example, I am a broker. Because I'm a broker, I might be a part of many groups or multiple groups on WhatsApp, right? So I'll show you. So basically, you would be part of multiple groups on WhatsApp, right? A broker would have larger extensions because broker's work is to find buyers and sellers all the time, right? So obviously he would be part of multiple groups and he would put the request on multiple groups, and that is how he will be able to find out.
Why his own personal networking?
Yeah, personal networking. If you don't want to take services of broker, it's fine. It's your choice. You have to do that in your own personal networking, or you rely on someone else's personal networking, or you have to do your own personal networking. So one such group I'll show you. For example, I am part of. For example, a part of this group. What is the name of India Opportunities, right? Let's see what kind of codes are there. This is like these. It is used as an OTC market only.
Okay.
16 acres commercial land in Hinjwadi, Pune available for outright acquisition. Ideally suitable for grade 1 commercial office and high-end retail. total land size 16 acre, ownership, big infrastructure company, most approval in place, expected price 250 crore. Sharing few details in the screenshot. डिटेल वो दे दिया, ये प्राइस ऐसा, ठीक है। अभी अगर तुम्हारे पास 250 करोड़ का ग्राहक है तो ये भाई से मिलो, सुमोली, ये तुम्हारा ये मिलवा देगा। तो सुमोली here might be representing this big infrastructure company who to sell this 250 crore land, commercial land, right, in this area, Hinjwadi.
Right.
This is not an exchange traded deal. It is an OTC. Right. It is an OTC. This is not on exchange. अभी तुमको अगर 16 acre land buy करना है तो there is no exchange as such where you can go on exchange and मेरे को 16 acre land buy करना. And that is why OTC market throughout the world is maybe 10 times the exchange market with respect to size and volume and everything.
Okay.
Much bigger. Because a lot of these deals happen. और दिखाता हूँ. मिल नहीं रहा है, फ्लिपकार्ट का भी था मैसेज बट वो मिल नहीं रहा है।
एक क्वेश्चन, जैसे अभी भी ऑफिस में जैसे ट्रेडिंग अकाउंट का एप्लीकेशन है मेरा, तो इन देयर इज समथिंग कॉल्ड एसेट क्लास टैब, सो देयर आल्सो दे हैव दिस OTCS check box.
So because you have a broker's account, so as I told you, in order to take OTC market services, you can always connect with your broker.
No, I'm talking about the HSBC's
yes.
the developer application where we are developing. So even HSBC will be providing services like this. If their client wants to trade in this kind of OTC, would that be possible?
See, HSBC is providing big time services like this. There is no doubt in that. HSBC is, as I told you, investment bank so plays the role of broker for institutions, right? Obviously, for example, now read this. An affordable housing fund is looking to raise from limited partners. It's a $100 million fund. $1 million is equal to 8 crore. You're talking about 800 crore rupees. So this deal is not cannot be managed by anyone other than investment bank.
Oh, okay.
And the investors would not be like you and me. 800 crore रुपए डालना है, अभी नेहल व्यास से पूछा भाई 800 करोड़ रुपए डालोगे, आप डाल दोगे क्या? 800 करोड़ है आपके पास में? 1 करोड़ रुपए भी डालने के लिए है क्या? Because if you had 800 crore rupees, honestly, you would not have been sitting in this classroom, right?
True.
So obviously, who would be the investors into it? There would be HNIs and institutions. And who would represent HNIs and institutions? As I told you, only IBs would represent them, right? जैसे ये बंदे को रेस करना है, उसी प्रकार रिलायंस का और many families are there who are who belong to large group or who are investors who are sitting on thousands, 10,000 crore rupees of investors, right? They want to deploy money. तो उन्होंने भी वो they will tell their OTC desk of investment bank कि boss look for some deals. I want to invest 1,000 crore rupees, right? So he would be representing. So as I said, broker नहीं भी होगा तो चलेगा, but most of the cases you will find investment banker playing the role of broker for institutional client at least, because institutions do not want to deploy 1 crore, 5 lakh, 10 lakh, 50 lakh. They want to deploy 100 crore, 200 crore. So they look for opportunities. So obviously investment bank has that networking effect, right? So they can bring a lot of deals to them, and then these investors can evaluate one of those deals and invest in one of them. So obviously HSBC का तो काम ही है ये, वो रिटेल के लिए इंडिया में नहीं है.
हाँ वही.
It is not in India for retail. वो ठीक है, रिटेल है, छोटा मोटा इधर उधर करता है, उसके लिए वो बहुत छोटा बिजनेस है रिटेल, इंडियन रिटेल. वो यहाँ पर इन्वेस्टमेंट बैंकिंग के लिए है.
Thank you.
Yeah. So like this, so this one platforms. I just give as an example. It works as an OTC. This is how OTC work. Okay. So these are two different places, organized place and unorganized place. All the listed securities are traded on stock exchanges, or what we call as organized place. All the unlisted securities would be traded through unorganized place, that is OTC market. But that doesn't mean that listed securities cannot be traded through OTC. All the unorganized, unlisted securities, Nehal, there is no place actually. This Flipkart is unlisted, right?
Right.
So you have no choice. You have to do it in unorganized market or OTC market only, right? But that doesn't mean that listed securities cannot trade in unorganized place. Listed securities can also place in trade. For example, I had 1 lakh shares of Tata Motors. I can go to stock exchange and to sell it, right? But try to imagine if I sell 1 lakh shares on a stock exchange, if I put that much of order for sell, obviously I will not get the price which is the current market price going on. Why? Because supply will increase, and supply increases, demand remains the same, prices crashes like anything. So I may prefer to get that deal from an OTC desk of investment bank and ask them to search buyer or a group of buyers who can buy that much of voluminous securities. 1 lakh shares we are talking about, not 100 shares. Right? If I have 1 lakh shares or 1 crore shares to offload, I can always do a trade in an OTC fashion.
Right.
By directly meeting with the buyer. Because otherwise, if you are trading on the stock exchange, you never know who is the other party. So this side broker doesn't know who is this side broker. Are you getting what I'm saying? Exchange will never reveal this information, that who is the seller, the name of the seller, identity of seller is not revealed. Not only seller, the broker who is representing the seller, whose identity is also not really revealed. Only stock exchange knows who is buying and who is selling. Are you getting it?
Yes.
Only stock exchange knows who is buying and who is selling. The broker sitting this side, Nehal, sorry, the broker, for example, is an HDFC AMC, which is an asset management company. Is a buyer, wants to buy 1 crore shares of Tata Motors. And the broker representing them is, for example, your IB, HSBC IB. Okay. Now, and here the seller is, for example, Aditya Birla AMC, and the representative of that seller is, for example, JPMC IB. Okay. So here JPMC IB representing Aditya Birla AMC sold 1 crore shares of Tata Motors, and HDFC AMC represented by HSBC IB bought those shares, but HSBC IB actually did not know that who was actually the seller. Was it JPMC? Was it some other? Nobody knows who was actually the seller. And this HDFC AMC doesn't know that who was actually the seller. Was it Aditya Birla or something? Are you getting it? And same goes for Aditya Birla and this. So अगर आप कभी Zerodha का account खोलेंगे, if you ever open a Zerodha account, you will only get the codes that there is a buyer standing with this buy price to buy the share. But you will not get the name. So the buyer with the name of Nehal Vyas is standing to buy these many shares at this many price. Are you getting what I'm saying? The identity of the buyer and seller is not known, wherein the identity of buyers and sellers is exactly known in unorganized OTC market. Because in order to get the deal, you have to first meet. Perfect?
Yes. Thank you.
Okay. So this is the difference between an organized stock exchange market and OTC market. It was required. It is important that you know it. So in terms of broking services, investment bank can provide services not only on exchanges or for the trade, not only on exchanges for their client, but also on OTC market. They can get deals for their client, or they can represent themselves as a broker in the market. Any questions so far? Any questions? The silence means no is actually wrong. Silence never means no. Like silence never means yes, similarly silence never means no. Silence is always somewhere in middle. So tell me yes or no. If you have questions, say yes, no, so no. At least I want to hear 10 no's or 10 yeses. Even a single yes would be okay for me to respond, but no to aana chahiye, 10 no to aana chahiye. I'm waiting.
No, sir.
Okay, one no.
No, sir.
Two no.
No, sir.
Everything
Three
is
no.
fine,
No,
Sumit.
sir.
4, 5,
Till now, no, sir.
6,
No, sir.
7, 8,
No, sir.
No, sir.
9, 10. Okay, great. So this is my some style to wake up people, because otherwise in virtual world it's difficult to wake up people. You just sleep off on the other side of the screen. So these are some game I play in between. So do not get disheartened by my way of forcing you to speak. Okay. The third service which is provided on the institutional investment advisory side is dealer services. So what is the difference between broker and a dealer? Anybody can tell me in general, what is the difference between a broker and a dealer? In general, the terms brokers and dealers, how it can be different? Can anybody tell me? Anyone?
Sir, broker means I think so that he only deals with share only, and dealer like you written only bond, currency, equity, derivative, commodities.
No,
Dealer can
it's not like that.
trade in this.
No. Both the parties can do all the transactions.
Yes, sir.
Hi, Sumit.
Yeah,
Maybe brokers perform a transaction on the behalf of client or customer, and dealer performs transaction based on maybe the firm, maybe a firm or like.
No, not at
Yeah.
all. Not at all.
Sumit,
Brokers can present anyone.
broker only so when we call broker, maybe they will be taking care of stock exchange market, and if they are acting as a dealer, they will
अरे
be
Neil, broker सब जगह पे होता है. You go to take a house on rent, you get broker. You want to buy a second-hand car, you get broker. So try to think beyond that. Broker is a term common in any market, right? And similarly, is dealer. We have this retail market, dealer distributor network, all of these. So these has same meaning, even if it's they are into exchanges or non-exchanges. These are not new terms, Neil. Try to understand. These are basic terms which we, anyways, if you shift to new place, you can go to a broker, you can go to dealer. So what's the difference between this? Ayush Singh. Yeah, Surabhi. Yeah, Surabhi. Yeah, go ahead. Yeah.
The dealer, a doctor doesn't buy any securities for himself.
Yeah, क्या बोल रहे हो मुझे? I can understand what you're saying. And your voice is echoing a bit. समझ नहीं आ रहा क्या बोल what you are saying. Yeah, can you repeat once?
Is it better now?
हाँ, थोड़ा better है, बताइए. Yeah, I can listen. I can hear you.
What I was saying is that a dealer actually he can sell on his own behalf. But a broker only acts as an intermediary between the buyer and the seller.
Brilliant. So that is basically what the difference is, guys. A broker would not keep inventory in its own books. A broker will only play a role of mediator of making the buyer and seller meet. That is all. But a dealer can play the role of a mediator as well as it can have its own inventory of securities. Here, securities in real estate, for example, if you want to go take a house on rent, if you are going to a broker will not be able to give you a house on rent unless there's some other party with the name of landlord. But if you go to dealer will have its own inventory to give it to you, right? So that's the difference between broker and dealer, right? Always remember, guys, a broker is only a mediator. It cannot do much beyond that. But a dealer is something which can keep inventory of and sell it to the buyer and save time, right? So when you say dealer, investment bank can keep some securities in its own inventory all the time, and as and when there is a buyer, it doesn't need to go to various other and do networking and find out seller. It can sell its own inventory to the buyer. Similarly, if there's a seller who wants to sell something, a dealer can buy without having a buyer on the other hand. A broker will never buy without having a buyer on the other hand, because broker cannot buy and keep it in its own books. Broker is not going to invest that money. Broker will say, if you want to sell something, let me find a buyer. Until I find a buyer, the trade cannot happen. A dealer will say, boss, you want to sell something? I will get done today itself. Even though I don't have buyer, I will buy it because I will sell it at the time I get a buyer on the other hand. So they will buy it and keep it as an inventory. So dealer can go much beyond broker because it can keep securities in its own inventory. Is it clear?
Yes.
Yes,
Yes.
sir.
Yes.
Yeah.
Yes, sir.
Yes.
And here, Nehal, you need to notice that is why there is an importance of OTC desk of your HSBC.
Right.
Because the OTC, in the OTC market, investment bank not only plays the role of broker, but actually they plays the role of dealer. They keep buying the securities and keep it as an inventory themselves. Because in an offshore, in an OTC market, it is very difficult to find the buyer and seller at the right time.
Right.
At the same time, sir. And if somebody wants to sell it immediately, only a dealer can help you doing that. Why? Because the dealer, if you go to a broker will take that as many time. Yeah, it will take a lesser time probably because it would have a lot of networking, but it will take its own time. But dealer can do it immediately for you. Why? And that is why broker will never provide you quote without getting a quote from the other party. Dealer will provide you a quote immediately. It is that quote is called as bid ask quote. It's called as what? Bid and ask.
Oh, okay.
Right. For example, bid ask quote is 100 and ask is 102. The ask quote will always be higher than the bid quote because this bid ask quote is like buy and sell quote is not from the perspective of other party. It is from the perspective of investment bank itself. So it's what it is basically telling. I would buy at 100 and will sell it at 102. So if you are a seller, Nehal, you need to sell at 100. Why? Because investment banker then would be playing the role of buyer, right?
Right.
So investment bank is saying for any security, for example, let's name it security as a treasury bill. Okay. So I am ready to buy treasury bills at 100 and sell at 102. That means what? If you are holding securities and you want to sell it, you will get 100 rupees from investment. Right? And if you don't hold these securities and you want to buy these securities, you need to pay 102
to the bank.
Right? So this is buy and ask price, but not for not of customer's point of view. It is from the perspective of investment bank. Always remember, bid and ask quote is from the perspective of investment bank. Only a dealer can give you that quote. Why? Because only dealer can buy and sell in its own, right? Broker will not give you those quotes. So you would notice your HSBC OTC desk will be giving this bid and ask quote on a lot of securities very frequent, right? Right. So because they can buy it, they can buy the securities and they will sell, they're selling it at higher price, obviously, right? Right. In this case, in this price, they are making 2%, right? This 2% you can say is a cost. Is a cost and it's a profit which they would like to make. Why? Because there's a time difference. The buyer wants to buy at some point time different than the seller wants to sell, and in that during that time, dealer is going to hold those securities in its own account, right? So if it is going to do it 100, then it's a loss. Why is dealer? Why would dealer do this? Right? There's a loss. So it will always do it at a quote which will have a profit added in the quote itself, right? Is it clear? Right? So in OTC market, they plays a very important role. Why? Because in OTC market, there is no ready market where buyer and seller meet all the time on that exchange, all the at the same time. It doesn't happen in OTC market, right? Buyer and sellers are always in two different time zones. So and dealer can fast forward the entire process by keeping the inventory of the securities. So largely all the bonds, currencies, equity, derivative, commodity, all the securities are traded in the OTC market, and investment bank can play the role of a dealer. So dealer create the market. Dealer what? Dealer do what? Dealer is also known as dealer is also known as creator of the market. It is also known as what? creator of the quote. Why? It creates a market by providing a bid and ask quote. So I just explained the bid and ask. So for example, here, this is an example that JPMC as an investment bank playing the role of dealer wants to sell the shares of IBM or dealing into IBM into the OTC market, will provide the bid price as well as the ask price. This bid price is the buying price of JPMC and ask price is the selling price of JPMC. If, for example, KKR hedge fund wants to sell 1 million shares of IBM, tell me, what is the price they will get? 99.5 or 99.85? Huh?
99.5.
99.5. Why?
99.5.
Because that is the bid price of IBM. At that price, IBM is going to buy. So KKR hedge fund can buy 1 million shares of IBM to a dealer at a price of 99.5. Similarly, on the other side, Fidelity wants to buy 1 million shares of KKR of IBM. Then it has to pay what price? 99.5 or 99.85?
99.85.
99.8.
So as giving this market, creating this market for these two parties, JPMC is going to get a spread, bid a spread of 0.35, and total profit for JPMC by doing this transaction would be 0.35, so $350,000, right? 0.35 into 1 million shares. So $350,000. That's a profit there. Is it clear?
Yes, Sumit.
Any questions? Mayank, you want to ask any question? You're not audible. You're not audible, Mayank, by the way. I can see you speaking, but I can't hear you.
Maybe there is a problem in my earphone. I will change it.
Yeah, now it's better. Now it's better. I can hear you now. Yeah, you were saying something. Sorry. Go ahead.
Might be there is a problem in my earphone. I will change it tomorrow.
Okay. You don't have any question. I can't hear you, but it's fine. You can write on chat if you have any question. Third service provided by investment bank to institutions are financial product distribution. So institutions can, investment bank can play the role of distributor of financial products on behalf of the institution by making distribution commission. So we know that a lot of this institution can be asset management companies, and asset management companies come up with mutual fund issuance, right? They come up with NFOs, selling mutual funds and all, right? So investment bank can play the role of distributor of these asset management companies products like a mutual fund or hedge funds or anything, and can sell this or can play a role in as a broker or distributor of the securities. So financial product distribution largely distribute third-party investment products like insurance, mutual fund, a lot of other third-party products they can distribute on behalf of their institutional clients. Because all insurance companies and asset management companies, hedge fund companies falls under the categories of institutional clients. Portfolio advisory services, basically investment advisory services to asset management companies, banking companies, investment companies. So advise on what is the combination of securities based on the risk and return expectations of the clients. When I say what combination of securities means, if you are to deploy 1,000 crore, how much should go in real estate, how much should go in gold, how much should go in equities, how much should go in debt products or bonds, or any other securities if there is any. So investment bank can provide portfolio and advisory services to the asset management companies in order to managing their portfolio with respect to what asset classes, what should be the trading strategies, when to buy which asset, when to sell which asset, on the basis of correlation of the securities, how much proportion should be kept in equities, how much should be kept in bonds, and so on and so forth. Or if a lot of investment houses, global investment houses considered emerging market as asset class. So for them, Indonesia is a different asset class than India. So how much to invest into Indonesia, how much to invest into India, how much to invest into another emerging economy. So it can be anything with respect to portfolio managing and what proportion. The asset class can be anything from equities, bonds, derivatives to even country. As I said, for them, and a country investment can itself be an asset class that, Indonesia may invest karna hai, so itna proportion you have to keep in Indonesian market, itna proportion you have to keep into Indian market, and so on and so forth. So all of those portfolio advisory services based on the risk and return expectations of their clients, they can provide, they can design portfolios for their clients. So portfolio advisory services. Another is portfolio management services, wherein that IB would manage the money of their institutional clients, not only giving advisory. Advisory is you are just giving advice ki yahan par invest kar dijiye, go ahead and invest here. Ultimately, investment will be done by the institutional client themselves. When you talk about portfolio management services, it goes beyond advisory. It goes with actual deployment of that money. So money will be taken care by investment bank directly for their institutional clients. So institutional clients will hand over the cash to investment bank, and investment bank will manage that money for their clients by managing in the form of portfolio only. So they would have to take not only decisions on, they have to do research not only for advising, but they will go beyond advising. So whatever research they were doing in the form of advisory, now they will have to implement all of those advices themselves on behalf of their clients, institutions' money, like asset management companies or pension funds, all those institutions which we covered in the previous. Similarly, investment banks can play the role of securities financing services. We also call it margin funding services. What is that? Basically, security financing services facilitates leverage trade by the clients by providing funding, financing for trade purposes to its clients. So, for example, Aditya, you want to sell 1 crore shares of Tata Motors without having those shares with you. Are you getting what I'm saying?
Yes,
because
sir.
in order to sell something, you need those shares with you, right? But
Yes,
without owning those shares, if you want to sell those shares, can you do it?
Yes, sir. Short sell.
It is called a short selling. But generally, those short sell, if you do not have those securities, those short sell transaction will be completed by the day end itself. Yes or no?
Yes, sir.
Right? That means if you have sold in the morning, that needs to be squared off by the day of the end itself, right? That means you need to buy those securities. So buy sell gets cancelled off, and you started with 0 securities and with 0 securities, right?
Yes, sir.
But if in case you don't want to close the trade by day end, then what can you do? Think about it. Then you can go to an investment bank. Very simple, right? Okay. No derivatives, my dear friend Aditya. Okay, you need to borrow securities. You need to borrow securities because trade has to close. You don't want to close the trade by buying today itself. That's your choice, but you have to, because if you have sold the securities and if it is not intraday, then you have to provide those securities to the buyer. If you do not provide, you will be behind bars. As simple as that.
Oh.
So you have to provide the securities, right? You have to provide the security. I'm not saying behind bars, that is very harsh, but honestly, margin money, these things cannot be happen. You cannot sell without keeping your margin in place. So it would be squared off. You will not be put behind the bars. So you will be given time. Give us these securities or we will square off the transaction. As simple, using your margin.
Sir, but how can I go to investment bank, sir? Because I am a retail investor. So I
Aditya, consider yourself an institution, honestly, for the
example. Yes, sir.
Yes, sir.
Yes, sir.
अभी ऐसा मत करो, रामायण पूरा हो गया फिर बोल रहे हो who is Sita, that's a big problem.
सही बात है.
So you can't do it as an individual. We can't do all of this. If you have to do short selling, then you will have to complete the transaction by today itself, right?
Yes,
by buying it, right? वो square off वैसे ही होगा. But if you are an institution, all of this, if you belong to those 12 categories which we have discussed, right, then you go to where? Investment. And
Understood, sir.
investment bank will borrow these securities, Aditya, from someone who is having these securities and do not want to sell the securities.
Okay.
So you sold securities of Tata Motors without having those securities, right? That means
Yes, sir.
somebody bought those securities.
Yes, sir.
That is happening on the background. Now you don't have those securities to give it to deliver it to the buyer, right?
Yes,
so
sir.
the investment bank find a long-term investors who is already holding those securities and do not want to sell in the next 1 month, 2 months, 5 months, whatever the tenure is, right?
Yes, sir. Yes, sir.
Will go because there are many long-term fundamental investors
Yes,
who
sir.
invest
They will
into
just
securities
borrow.
for 10 years,
Yes,
20
sir.
years, 100 years, right?
Yes, sir. Yes, sir.
So the investment bank will go to those clients, say, sir, anyways, those securities is lying in idle in your
Lend
there.
kar do apna shares bas.
Would you like to buy, earn some, you have no risk, but you can make some profit
Rate, some
in the
interest.
form
Yes,
of
profit. Yes.
fee. We
Fee,
call it
yes,
fee,
sir.
not
Yes,
interest
sir.
over it.
Yes,
But
sorry,
yeah,
sir. Fee. Yes,
it's
sir.
lending fee. That is
Yes,
fine. We
sir.
are going to do it. यार, sorry मत बोला दीजिए, ये हम बहुत डिटेल में करेंगे. देखो ये आपका
हाँ,
करेंगे यार. अभी आएगा मतलब ये आना वाला. I will do it in the level 2. Okay?
Yes, sir.
Security borrowing lending is a detailed topic. So just listen to me. क्या होता है? Then what you will do is you go to investment bank. Investment bank will check with any of its fundamental investor who has invested into the securities with a view of 5 years, 10 years, 15 years. Will go to him, sir. You want to make some extra money without losing or taking or losing your securities, because anyway securities are lying idle in your deposit with your depositories, right?
Yes,
Securities lied with your depositories, right? So he says, yeah, okay. So what this investment bank will do is bank will take those securities from the depositories of the fundamental investor and will sell it. Not sell it. Will give it to or lend it to the borrower.
Borrower, yes, sir.
Like you, for example.
Yes, for
who has sold the security, right?
Yes, who wants to sell,
Right?
yes.
Will borrow it from. Will borrow and now because now you have borrowed it from someone with the help of
Yes,
investment bank. Now you
the
can deliver
long-term
this
investment.
services security. Now you can deliver these borrowed securities. You can deliver to the one who had
Original
bought
buyer.
from
Yes,
you.
yes, yes, yes.
Right? So
Yes,
the
sir.
deal is done. The buyer is happy. Now no square off will happen. But have you sold the securities?
No.
Have you actually bought the securities?
No. Just borrowed
Right?
it.
You would only like to buy the securities at a lower price, because if you have sold the securities without having securities with yourself, that means you are expecting the prices of those securities go down, right?
Yes, sir.
So whenever the prices of the securities go down, now you can buy it from the market and give it back to the lender.
Yes, sir.
From whom you have bought it, right? And in that you will make some profit. Why? Because you sold at a price, you buying at a lower price, you make the profit, and out of that profit you will pay some security borrowing lending fee to the investment bank and that lender.
Yes, sir.
So investment bank can help both ways. If you are sitting on a lot of securities and have no plan to sell it, you can ask the investment bank to find someone who is ready to borrow the securities from you and give you security lending borrowing fee.
Yes, sir.
And if you are doing a lot of short selling and you don't have securities, you want those securities to square off the deal, but you do not want to do it by buying at today's price. You want to buy it at futures price, which you think would go down. So you simply want to borrow the securities. You can go to your investment bank, say, I want to borrow securities, and it will. So both ways, investment bank can help you or facilitates in the leverage trade by the client by providing funding or financing for trade purpose to its clients.
Yes.
Sorry, this is security borrowing lending services. I explained. Okay. This is something.
Yeah, understood.
Security borrowing lending services. Sorry, we just talked about not financing services. I'm sorry, guys.
That's fine. Yes, sir.
Security borrowing lending services we're talking about, right? I just got into both the topics together. But yeah, this is something security borrowing lending and services where investment banker helps its clients to borrow securities or lend securities which is lying idle with them. Okay. Securities financing services basically paying money. You want to buy securities. So for example, you have 100 rupees, Aditya, and you want to buy securities worth of 200 rupees. You can, on your 100 rupees, you can borrow money from your investment bank and buy 200 rupees worth of securities. So it's kind of a funding services, and investment bank will charge interest for that, right?
Yes, sir.
That is called as leveraging. Okay. So financing is very simple, guys. I slipped both topics and merged both the topics.
No problem.
Let me explain it once again, just to clear it. Borrowing and lending services with respect to borrowing the securities. which is lying idle with, borrowing the securities which you have sold and you need to square off the trade with the buyer, but you don't have the securities to square off. So you borrow the securities from someone and give it to the buyers. And then how would you repay your debt? You repay your debt by buying those securities at some future date and give it back to the people who a party to whom you have borrowed, from whom you have borrowed. With that, you pay a fee. Lending is when you are sitting on idle securities which you don't have any plan to sell in many years. You can make some lending fee on it by lending it to someone who needs it, and this is in context of securities. Securities financing services is when you have 100 rupees with you and you want to buy shares worth of 1,000 rupees. On your 100 rupees, you can take loan of 900 rupees from your investment bank. Investment bank will happily provide you that service. I'm not in the same ratio, 1:10. I don't know if it depends on what securities and all, and what is the comfort level of investment bank, but they can provide you some funding on the securities. So if you have 100 rupees, you can maybe buy the shares worth of 300 rupees also. This 200 rupees will be funded by investment bank to their clients. Is it clear, guys? I'm sorry for the confusion, but is it clear?
Yes, sir.
Both the concepts?
Yes, sir.
Yeah. Any confusion,
Yes,
guys?
No.
Okay. Next
No,
is
thanks.
post-trade services, guys. Post-trade services are with respect to, once the trade has happened, there are some services like clearing services, settlement services, valuation service. These are provided by investment bank to their clients. Clearing, settlement, we'll talk about these in detail when we'll talk about clearing and settlement. There's a cycle called as TCS. The cycle called as TCS, and this is not the TCS Prasad, which is competitor of Emphasis. It's not a competitor of Emphasis, yeah, but it's a large cap and not
Trading cycle settlement.
But this is Prasad. Here TCS depends on here TCS means transaction clearance and settlement. Sorry, trade clearance and settlement. So TCS over here stands for trading, clearing, and settlement. I'll show you over here. So every trading cycle will have this function of TCS. Yeah, trading, clearing, and settlement. The day when trading happens, after that clearance needs to happen and the settlement needs to. So these three are the function which is called as TCS, right? So yeah, so that is what it helps in your trading, which is we already talked about that it can play the role of broker and dealer and be a party to the trade for you. Similarly, it will help post-trade. Once trade has happened, then there are services like clearing services, settlement services. It can help its clients for clearing and settlement, and valuations of the securities which generally are not listed. For the listed securities, there is no need of valuation, but for securities which are not listed, if your client wants to know, if the client is holding those securities, wants to know what is the valuation, how the change in the valuation is, investment bank can provide and perform valuations and provide the valuations of the services. Okay, sir, you have bought Flipkart shares 3 months back, though we do not know the market price of it, but as of today, according to our estimates, the value of these securities should be like this. An investment bank can provide something called as operational infrastructure support. It can provide real estate infrastructure to its clients. It can provide technological services to its institutional clients. It can provide human resource support to its clients. It can provide a lot of risk management, risk analytical, and risk analysis tool related support to its institutional clients. And there is one specialized service which we'll talk about. But before that, let's talk about risk management solutions. It can provide risk with management solutions to its clients, like its corporate clients, which are facing bond price risk, FX fluctuation risk, commodity price risk. Similarly, its institutional clients can also face one or many of these risks. investment banks can design solutions for them by buying forwards, futures, options, or other derivative products for its clients. This is from the perspective of institutional investor clients. That was with respect to corporate clients, right? Corporate solution. One specialized services is known as prime broking services, which investment bank provides only to its hedge funds. So it's hedge fund clients. Okay. So there is a hedge fund clients which needs these services of keeping the custody of securities, settlement the securities, managing the security, financing, lending, operational infrastructure services, all of these services which it needs. And all of these services are clubbed together. An investment bank can provide it by floating another separate legal entity claiming itself as a prime broking services. So what investment bank will do is, investment bank, for example, JPMC, will float a prime brokerage service arm, a separate prime brokerage service arm, and under that separate entity, it would provide prime broking services exclusively to its hedge fund clients. So prime broking services, which covers all the other services of investment banks like custodian services, settlement services, and all, but exclusive to only hedge funds, because hedge funds deals happens in millions and billions of dollars, and that is why an investment bank provides them exclusive services by floating a separate entity only for that particular hedge fund with the name of prime brokerage services. Any questions so far?
So Sumit, one question. So prime brokerage or prime finance, right? These services are still the same. The custodian services, everything, the broker dealer,
but they are
everything
exclusive
will be
only
the
to for
same.
hedge clients. Yeah.
Okay.
But they're exclusive to hedge funds.
Okay, they're exclusive only to hedge funds. Okay.
Correct. Why? Because hedge funds are, do these transactions in bulk, and it happens in normal business also. If, for example, if you are dealing with 10 distributors, obviously, if there is one distributor who's ready to buy equivalent to 9 other distributors at total value equivalent to 9 other distributors, and to do that, if you have to give some extra services, or you create a separate department for that particular one broker, one distributor itself, you would go ahead and do that, right? You will treat in any in your company also. It happens, right, that there are some services which are same as which you are providing to some other clients, but for that particular client you make a separate team because that client is very big and you do not want to give that role to a mixed team. You just only want to focus, you want to create a focused group only for that particular client, right?
Yeah, quick thing, right? We've also seen some, so under prime brokerage, prime finance, we've seen that, there are derivative operations, be it listed, be it OTC, and equity operations also. I'm not too sure about the security side of the world, but at least from derivative ops, we've seen that that product types are also a part of prime finance or prime brokerage, right?
So not these 5. No, not these 5. These are for all the services which an investment banker can provide. So investment banker can provide these risk management solutions where it has operations desk of derivatives and all this, right, as a separate service. But here under prime broking services, they will provide all of these services, all those 11 services which we talked about: operational infrastructure service, having op desk for all of these things which you are talking about, equity deals, derivative deals, all of these, or buying. We have all of these like dealer services. Generally, it would be a dealer ops team would be as a part of broking services or dealer services. But here, club all these 11 services and put under a separate entity and call it as a prime broking services only for hedge funds. So it has all those services which you're talking, which an investment bank can provide.
That explains. Yeah. Thank you so much. Thank you.
Yeah. Thank you. Any more questions, Vedant? All right. If there are not many questions, let's go ahead. Let's talk about financial market. What is financial market? So we are moving ahead from the types of institutions to what type of different financial markets are there as a in financial system. So basically, we know what is financial, what is market. We know, right? Market is a place where buyers and sellers. It's a very cliche definition, and we all know it, right? And when we talk about financial market, obviously it's like any other market, but the products and services would more of financial products and financial services, right? Or instruments, or securities, financial instruments, financial securities, financial assets, financial products. So it's a place where buyers and sellers meet and trade in financial products, financial assets, financial instruments, financial securities, and financial services. And it can be a physical place or it can be a virtual place. These days, largely all these places are virtual, like NSE, BSE. All these have their virtual system to which is called as financial market. But they can earlier there used to be a lot of these markets in the physical form, right? If you talk about 1990s, even in India, a lot of these markets were physical markets where people used to go to markets every day, and especially those who used to be investor and trader into securities, they have to go to Mumbai. They had to go to Mumbai for this transaction because all these markets were largely were in Mumbai. But it was not only because earlier in India, stock exchanges were not only two, that is BSE and NSE, as we know nowadays. They were state-wise exchanges, security exchanges. It was not National Stock Exchange and BSE Stock Exchange. They were there, but there were small state-wise stock exchanges earlier. For example, Ahmedabad Stock Exchange or Ranchi Stock Exchange, like this. So every state used to be an stock exchange, and people used to go to there to really trade into the securities. Kolkata Stock Exchange and all. Now with all of these physical markets has really been of no use now anyways, and everything has become virtual place. In today's world, there's one physical market which is still there. It's a very small piece, but it's still there. In US NYSE, it is called as trading pit of NYSE. It's very small, where still physically transaction happens. So it's still, physically like this transaction happens, but that is a very small market, by the way, trading pit of NYSE. This is how it looks. A very small, but yeah, there's a trading floor in NYSE where still transaction happens physically. But it's a very small place. Okay. But back then in 1980s, 1970s, if you would have seen these floors, they were like, if somebody has seen that movie, that series, Scam 1992 on Sony Live, in the starting few episodes, it has shown that Indian market also where it used to happen physically. Right. So now all of these things are all these marketplaces are virtual for the exchange traded basically transactions. Yeah, for because even if you are meeting physically, entire depositories and everything will work in virtual manner only. Your shares are generally not given you physically these days. Everything is given in dematerialized form, right? Any shares you buy, you get those in dematerialized form. Even for the shares, even if you buy the shares of unlisted companies like Flipkart and all, you will get those shares delivered in a depository, in your depository, in an electronic form. So financial markets can be categorized like this: capital market and money market. Right. What is capital market? Capital market is a market where transactions for long-term and medium-term finance happens. Securities are issued for the first time and securities are traded. So capital market can be primary market as well as secondary market. Primary capital markets are the markets where the money is raised by issuing long-term securities or medium-term securities. When we talk about medium-term, securities which are issued with a tenure of more than 1 year is called as medium-term securities. Between 1 to 5 is medium, and beyond 5 is long-term. The tenure of the securities is beyond 5 years, is long-term. And primary market, the issuance of those securities happen for the very first time. Secondary market, those securities get traded, but the securities are long-term or medium-term. So long-term and medium-term securities, when they are issued for the very first time, it is issued in the primary market, and after issuance, those securities get listed. If then they are traded in the secondary market. Again, secondary market can be listed, that is organized, which is exchange, or secondary market can be OTC. OTC for those securities which are not listed as well as which are listed, but bulk transaction happens. OTC. Similarly, for money market, same primary market is there when the securities are issued for the very first time, and secondary market is there where the securities are traded between the investors. But the only difference is that the securities should have a tenure of less than 1 year. That means the life of those securities would be less than 1 year, or up to 1 year. They would be issued in the primary money market and traded in the secondary money market, but their tenure would be less than 1 year or up to 1 year, right? So these are with respect to securities issued, right? With respect to securities, with the time of the securities. Then other than securities, financial market can have something called as currency market, where currencies are traded. Foreign exchange currencies like domestic currencies, foreign currencies. So domestic exchange happens for domestic currencies against domestic currencies. Converting domestic currencies into foreign currency, or converting foreign currency into another foreign currency. This would largely be a secondary market, no primary market, only a secondary market. Currency market is purely secondary market where transaction happens between two parties for buying and selling currencies. Commodity market. Commodity market is again markets for commodities like precious metals, agri commodities, energy commodities. And derivative market is a market for hedging, for trading of products like forward, future, option, swaps, swaptions, exotic derivatives. So these are the various kind of financial markets. One is capital market, primary market, based on the tenure of the securities issued. Then currency markets, commodity markets, and derivative markets. So these are the primary markets, and we will discuss each of these. If you can see, we'll discuss cash equities, which is a part of capital market. We'll discuss fixed income, which is also part of capital market. We'll discuss money market. We'll discuss forward futures, which is part of derivative market. We'll discuss options, FX markets, again, which is part of derivative markets. We'll discuss swaps, which is again a part of derivative market, and we'll discuss FX, foreign currency market, which is part of currency. In each detail, each of this. Now, what is the purpose of financial market? Financial market facilitates in capital formation because it helps in transferring the funds from savers or investors to borrowers and issuers. That is primarily the role of primary market, where issuers can issue the securities and raise money from investors, or borrowers can borrow money and raise money from savers. Financial market also facilitates trading between willing buyer and willing seller. So it is not only primary market, as we said, it is a secondary market also. So where two parties can buy and trade, buy and sell securities. Interested parties can buy and sell securities in an organized as well as unorganized market. If the buying and selling is happening on organized market, we can say it is an exchange traded transaction. If the buying and selling is happening in unorganized market, we call it OTC transaction. Another important function of financial market is price discovery, because the trading happens, trading of securities happens in financial market, and price discovery is nothing but the demand and the supply. That is, buyers create the demand and sellers create the supply, and a conjunction of these creates the help in identifying the price. So it helps in the price discovery of the securities. It's a very important function of financial market, because otherwise it is impossible to find out the price of any security or any asset class. So because it's a market where buyers and sellers, both demand and supply forces meet, it helps in the price discovery, right? in a financial market, one can trade both time as well as risk. So one can be short term or medium term or long term, or one can invest into safe securities, medium risk securities or high risk securities. So financial market provides the place for doing the trade both with respect to time. If you are a short term buyer, you can go to financial market, but a money market. If you are a long term buyer, you can go to capital market for long term securities, or you can invest for long term, short term, medium term in any of the securities. And if you want to trade risk, you can go and invest into high risk securities like equities, or you can go to and invest into low risk securities like bonds, right? Guys, just give me a second. It's my dad's call. I just have to address it. Just give me a second. All right, sorry guys, it was a call from my dad. I had to pick it. Yeah, so I was telling you. So if you are a short-term investor, long-term investor, medium-term investor, you can go to financial market. If you want to invest into safe securities, medium risk securities, high risk securities, again you can go to financial markets. So it helps in price discovery. It helps in trading someone time as well as risk, and maybe both. And it helps in provide liquidity. Again, it's a very important feature of financial market, guys. Liquidity, to provide liquidity. Why? Because financial market is a place where buyers can meet and buy, sellers can meet and sell, right? So if you are an investor and you are holding some shares and you want to sell the shares, and if there is no financial market, just as think about it, it is impossible to sell the shares, right? Then you will not be able to sell the securities. That means your securities will not be liquid. So when we say liquidity, what we mean is this, that we can immediately convert into cash, or we can easily convert it into cash because there is a robust financial market available. So financial market reduces the so financial market provides the liquidity for financial securities and convert financial assets and help converting financial assets into cash. Then financial market reduces the search cost for buyers and sellers. Again, guys, it's very important. And obviously, you can call it search cost, you can call it transaction cost, whatever you want to say. But there's always a search cost, right? For example, if there's no financial market, then you'll have to, and you want to buy some securities, you'll have to search for seller. And to search the seller, search cost can be in multiple forms. The seller is asking you to come to Mumbai. You are sitting in Rajasthan. You have to travel to there and meet them physically. So you need to spend money on coffee. Maybe seller asks you to come to coffee house. You need to spend money on coffee, and you need to stay in the hotel, and you need to travel. You need to. So search cost can be in any form, right? Or it can be paying money to a lot of brokers who is searching for on behalf of you. So if there is no financial market, proper financial market, then search cost will be higher. Obviously, the search cost in OTC market is higher than the search cost in exchange traded market. That is also okay. And I hope you understand why. Because in OTC you have to search for the other party, but in exchange traded, the buyers and sellers all are available on virtually on the internet. Financial market organization increases the volume of trades and thereby reduces the transaction cost, obviously. And financial markets are regulated markets, so you can and so the smooth settlement of the trade transactions can be ensured within a specific time period. It cannot happen like this, that if the time period of a particular time transaction is 2 days, then that transaction will happen in 2 days. You will get your money in 2 days for sure, because regulators are regulating the market. So that's again an advantage for financial market. Any question, guys? So far, tell me. Any question? Anyone? Are you guys getting bored? Tell me.
No.
Awesome.
Okay. All right. Now let's shift to another important factor of financial system, that is financial market participants. Right. So who all are the participants in a financial market? Some of this we would have understood already, but let's understand. In two extremes, there is one extreme where there is an issuer of the securities. On the other extreme, there is an investor. Issuers of the securities can be government. Issuer of the securities can be government. It can be municipal corporation. It can be corporate, right? Who issue the securities in the form of equity, bonds, government securities, government bonds, money market securities, right? So issuer of the securities, and on the other conundrum, it is investor. And an investor can be, and investors can be an individual, HNI, or an institution, right? So these are the two conundrums. On one side, there is a issuer of securities. On another side, there is investors. And in between these two conundrums, in between these two extremes, there are many intermediaries. There are many intermediaries who plays their specific role, important specific roles as financial market participants. So let's learn. The first is issuer, I told you, issuer of the security. Second is investment bank. We already know how investment banks plays an important role for both the parties. One is issuer as well as investor, right? For investor, it helps them in investing, making investment decision, getting good deals. And for issuer of the securities, it helps them by creating the market, by becoming a lead banker, by creating demand for it, by managing the fund, the entire issue, underwriting the issue. We learned about all of this, right? So investment banks helps the corporate issuers in raising the capital through the securities by becoming a lead manager, co-lead manager, underwriter, registrar, distributor. Also, investment banks can help in the secondary market operations also by becoming a broker, dealer, and all of these. So it plays a very important role as a financial market participants. Third is financial market utility participants, FMUs. And there are 3 FMUs we'll talk about. These all are categorized as one, which is FMU, for financial market utilities. So these 3 participants provide financial market utility services. These are exchange trading platform, clearing house or clearing corp or CCP, and central security depositories institutions. So depositories. These are called as, they play a very important role of financial market utilities. First is exchange trading platform. So exchange trading platforms provides the platforms a market where the willing buyer and willing seller can come and do the transaction with the help of their broker or dealer or trading them. So famous exchange trading platforms are NSE, BSE in India. In US, it is NYSE, NASDAQ. In London, it is London Stock Exchange, like this, right? In Hong Kong, it is Hong Kong Stock Exchange, like this, right? So, for example, if KKR hedge funds want to buy 1 million Apple shares, where would it go? Where would it go? It would need to go to its broker. For example, that broker is JPMC. Now, how would JPMC would buy the shares if it has to buy the shares from organized market? Where would it go? It would go to a financial market utility, which is nothing but a trading platform provided by, because these are Apple shares, they are traded in NYSE or NASDAQ, so it will go to NASDAQ or NYSE for the transaction. Yes or no? Think about it.
Yes.
Yes.
Similarly, on the other hand, if Fidelity Mutual Fund wants to sell 1 million Apple shares, it will go to its broker, who would get the transaction done again on a trading platform called as NYSE. And as I told you, the beauty of trading platform is the tradings are anonymous. That is, buyer doesn't know who exactly is the seller, seller doesn't know who is exactly the buyer. These all are auction-based trading platform. They are what? Auction-based trading platform, because what happens is this, that on behalf of KKR hedge fund, JPMC will put a quote that we will buy, we are ready to buy the shares at $121 per share, and our quantity is 1 million. So that is the auction. That is the quote they have given. Similarly, the seller would give its quote. And for example, seller is saying, we want to sell 1 million shares at 122 rupees. Tell me, can that trade happen? Can this trade happen?
Yes.
It cannot happen, right? Why? Because seller wants to sell at 122 price and buyer wants to buy at 121 price. This trade cannot happen, right? Yes or no?
Ulta. Okay.
It can only happen if both are ready to buy and sell at the same price. Hello.
Yes.
It's very simple, right? Think about it. Ulta सीधा कुछ नहीं करना है, boss. Hello. See,
Okay.
if I want to buy something at the price of 121, seller want to sell at the price of 122. Can that trade happen?
No.
It can never happen, right? Because why? Because buyer wants to buy at 121, seller wants to sell at 122. कैसे होगा ये price? Until unless the price is same, the trade cannot happen. Yes or no? Yes or no?
Yes.
It can only happen if the buyer is planning for 121 and seller is also ready to sell at 121. Then trade can happen of 1 million shares. So the quantity should match and the bid and ask price should match. The trade will happen, right? Just give me a second, guys. All right. So that is why it is called as auction-based trading, because buyer put his auction, seller put his auction. Anonymous trading because buyer doesn't know who is the seller, seller doesn't know who is the buyer. So this is the platform of trading which NYSE provides. So this is called as exchange trading platform, where the buyer and seller put their respective quotes, and if they match, then trade happens without buyer knowing who is the seller and without seller knowing who is the buyer. Only trade happens, transaction happens, but securities are not exchanged. So look at other market utilities companies. Another market utility company is clearing house. So what is the role of clearing house? Clearing house does the function of clearing and settlement of trades. All exchange trade must go through a clearing house process. Read this carefully. Not all trades, only all exchange trade must go through clearing and settlement process. So if any trade which is happening on exchange, that is organized market, then it has to go through a clearing house process, because clearing house will guarantee the settlement of the trade. Clearing house can also do the clearing and settlement for certain mandated OTC trades or volunteered OTC trades. But that is the beauty of it, that OTC trade, all OTC trades will not have clearing house, but all exchange traded trades would have clearing. So on exchange trade cannot happen without clearing house. All exchange traded trades must clear and settle through clearing house, but on OTC market, trade may or may not have a clearing house. It depends on if both the parties are volunteering to put a clearing house, they can do that. If both the parties are okay doing a trade without a clearing house, they can go ahead with it. Or there are some OTC trades which are mandated by regulator, that those trades cannot happen without a clearing house in between as per the regulator, then those OTC trade needs to go through a clearing house. But most of the OTC trades do not have a clearing house, because it is not mandatory for all the OTC trades to have a clearing house. But it is mandatory for all the exchange traded trades to have clearing house. And that is why exchanges are always the safest, because there is a clearing house involved, the settlement and the clearing and settlement is guaranteed. The settlement is guaranteed. If you are buying shares on NSE, you will get the shares guaranteed. There's no doubt, right? Why? Because it happens through a clearing house. So there are many clearing house which are famous, like LCH, ICL, NSCCL, CCI. These all are clearing corporations or clearing houses. What is the role? How do they play this clearing role? Let's look at it. So once a trade happens between two parties, that trade goes to a clearing house. For example, in US, if it is happening, it will go to DTCC, a clearing house. Now, what is this clearing house will do? Right? This clearing house, what it will do is, through your clearing house member or through a broker, it will get the trade confirmed and settled. So that is a very important role of clearing house. So let's look at it. What happens in the process of clearing? As a process of the clearing house will identify the obligation of both the parties and tell them that, boss, this is your obligation, that is your obligation. You need to bring both things as per your obligation and give it to me, and I will settle it for both the parties. So for example, if KKR hedge fund is entering through the help of its broker JPMC to buy 1 million shares, tell me what would be the obligation of KKR hedge fund in this transaction? What would be the obligation?
KKR has to pay 1 million amount.
So no, not 1 million. It has to pay $121 million, right?
Yes.
Right. So KKR's obligation is $121 million. What would be the obligation of Fidelity?
Fidelity have to give the securities to the KKR.
So Fidelity's obligation will be to make available 1 million securities of Apple shares, right? Now, for NVIC, who are the clients? For NYSE, who is the client?
JPMC and Fidelity.
No, JPMC and GS,
KKR.
Goldman Sachs.
Yeah.
Yes.
KKR hedge fund can never be a client to NYSE. NYSE do not deal with institutional clients or individual clients. It doesn't do any trade with any investor. Okay, any kind of investor. It do trade only with the brokers, and that is why for exchange traded transaction, you need to go with the help of a broker. You cannot do a trade without a broker, right? So for NYSE, the client is JPMC and Goldman Sachs. So NYSE will pass on the information to DTC. See, the obligation of JPMC is to bring $121 million, and the obligation of GS is to bring 1 million Apple shares. Now DTCC will get both the obligation clear, will tell boss JPMC pay $121 million, and boss GS give me 1 million securities. This is your obligation, right? Now, for example, at the exact time when this needs to be done, when the money needs to be transferred and security needs to be transferred to the respective parties, sometime before that, clearing house will tell, was you need to be ready with the cash. Clearing house DTCC will tell to JPMC, you need to be ready with 120 million cash at what time? For example, 11 a.m. So at 11 a.m., come and give me this cash. And at 11 a.m., come and give me. To GS, it will tell at 11 a.m., come and give me 1 million shares of Apple. So that is pay-in time. Pay-in time will be before payout time. So pay-in time will be with respect to JPMC, that is broker and clearing house. And payout time will be with clearing house and both the brokers, but on the opposite side. That means what? At 1 p.m., 2 hours after receiving 121 million from one party and receiving securities from another party, clearing house will transfer 1 million to GS and securities to JPMC. For example, why there's a gap? Because, for example, at 11 a.m., Goldman Sachs has delivered 1 million shares of Apple to clearing house. But if JPMC has not delivered 121 million to clearing house, then what will happen? The trade
JPMC will have penalties. Yeah, JPMC will have penalties.
Is fine, but that penalty will be, but the trade will be cancelled.
The
That is
order
more
won't
important. Try to
execute.
understand. The order will not be executed. That is more important. Penalties, and okay, I agree. Penalty will be there, honestly. But important point is what? That trade will be cancelled. And who would be saved? Goldman Sachs would be saved. Why? Because clearing house will give back the securities to GS. Bolega, sir, take back your securities. I'm sorry, the other party has not meet its obligation, and that is why. Otherwise, what will happen? Think it, if there is no clearing house, GS transfer the securities to JPMC, and JPMC will run away with the securities and say, I will not make I will not pay because I don't have cash. So who is at loss? GS, right? If there is no clearing house, and if JPMC doesn't have money, yes or no?
Yes, Sumit.
Right. So that is why it ensures guaranteed transaction and it ensures guaranteed trade without any loss. It will take money from both the parties. Sorry, it will take money from one party and securities from another party and will pass it on according to their new owners. So the owner of money will become GS and the owner of JPMC will become, sorry, the owner of securities will become JPMC for clearing house. Then JPMC will transfer these shares to its clients, that is KKR hedge fund, and GS will transfer this money to its client, which is Fidelity. So clearing house will play a very important role of identifying the obligation of both the parties and taking the obligations at one, bringing both the obligation at one place, and then transferring the respective things to the respective parties. And yes, nobody can default on it because there would be huge penalties to it, and that is why JPMC will never default it, but it ensures the trustworthiness that yes, both the parties can be rest assured that if we are doing trade on exchange, then transaction will happen. Why? Because clearing house will ensure that transaction happens. Both the parties receives what they are entitled to receive as a part of their trade. Is this clear? Tell me.
One question.
Sorry. Yeah, please go ahead with your question if you have a question. Yeah, go ahead with your question. Yeah, come on.
Hello.
Yeah, I'm listening to your question. Hello.
Yes. If any party want to cancel its trade, this trade, then it can be happen between the pay and payout time.
It would be it would be huge penalty and it's a tough question, tricky question, but it would not happen.
Okay.
Most of the cases it will not happen. See,
So
if
with
it is
follow up to that, right? I think.
Yeah, Prasad, go ahead.
Yeah. So, like for example, you gave a very nice example of DTCC, and in Europe we use Euroclear, right? So this clearinghouse, are these regulated private entities or are these government bodies? One, and follow up to that is that since most of the world is now that there is a definite time period between the trade date and the settlement date, and the world is trying to closer the gap between these two dates, right? Why is the accountability of the custodian or of the buyer or the issue or the seller? Why is this accountability put on these guys rather than the clearing houses?
Okay, so you'll have to repeat your second question, but after I answer your first question. Okay.
Yeah.
So these are government companies or private companies? These are private companies only. For example, if you talk about CDSL and NSDL, which are working as clearinghouse as well as depositories in our country, India, right? So both are private companies, right? So CDSL is owned by a listed entity with the name BSE, and NSDL is owned by NSE. And both are private players, right? And in fact, BSE shares are traded in the market, right?
Right.
So,
yeah. Okay.
So they can be private. And then I have to speak on it. But I know where this question comes from, because the trust increases if it is a government entity, right? So for many clearing houses, there are government companies which are giving private contracts, because clearing house is not a concept only in transferring the securities. There, clearing house as a concept is there in many things. We in India have clearing corporation of India is there, right? So we need to understand clearing house requirement is not only for this shares traded. For example, if you are issuing any check, there also you need a clearing house, because that and clearing house will be entitled to find out that the check is issued by a party has the cash in its account or not. It will confirm to the other bank, okay, this party has cash in its or not. Also, it needs to verify that this check is issued by the right party or not. Was it the sign is matching or not, and all, right? So it can be an institute. Now here, if you have an infrastructure company, can be promoted by a group of banks also, right? So for check clearance, for example, a group of banks will come and create an infrastructure company like clearing house for checks. So the ownership will be of all the banks together, right? Similarly, clearing house can also have an ownership in terms of stock market. Clearing house can also have an ownership of all the exchanges in that country, because ultimately exchanges are benefited. Because ultimately, then otherwise it would have been a headache of an exchange. Because exchange is promising. Who is promising ultimately, Prasad, over here, that delivery is guaranteed and risk is zero for the trade, and there would not be trade failure? Who is guaranteed it? Ultimately, it is exchange who is guaranteed, right?
Right.
So clearing house is supporting an exchange to provide these services. So it can be a company which is promoted by exchanges together. Yeah. Right. Now we need to go to the second question. You say, yeah, the world is moving towards fast transaction from T+2 to T+1 to T day same day transaction. Yeah, but can you? Yeah. So what exactly was your question? Yeah.
But the ownership of the trade cycle is always with the custodian or the issuer or the receiver, right? But why is this ownership not with the clearing houses? Because they are the ones who's kind of fulfilling the trade, right?
So they are supporting company. How can they take the ownership of it? Think about it. They are the support. They are providing a support wherein they are checking that that party is having cash in its account or not. They are confirming, okay, the party is having cash. Second, the party is having securities in its account or not. So it's confirming. So it's just a confirmation. It is putting both the parties together. It is playing a role of mediator. For example, Prasad, escrow account, right? It is as good as an escrow account of a bank.
Yeah.
Right? Now, for example, you and we want to enter into a transaction where you are ready to sell your car to me, and I am ready to pay your second-hand car for me, right? It will always be, and I'm ready to pay 6 lakh for that. And it's a problem of chicken and egg. Who will pay first? Will you deliver the car at my home first, or will I pay you 6 lakh rupees first? That's the problem we are facing, right? And then, in order to resolve the problem, for example, HDFC.
Yeah. Okay.
As soon as car to me, yeah, I have got the car. will say, give me the, I will pass 6 lakh rupees to Prashant. Now, if you do not, HDFC Bank is not going to.
Sumit, your voice is
Voice is
breaking.
not clear,
Next
sir. Voice
car
is
to
not
तुम्हारे घर
clear.
आएगी, car means you will receive car. But yeah, am I audible now? Am I audible now?
Yeah,
No,
it's
sir.
better, but
Your
it's
voice
still
is
static.
breaking.
Voice is break.
Just give me a second. Just give me a second. Just give me a second. Yeah, am I audible now?
There is still static.
It's still breaking, sir.
It's fluctuating internet connections.
Sumit, hi, this is Louis. Can we take a break in the meantime that you fix your internet?
I guess he's still trying to fix up the network.
He's replied on the chat. We can take a break.
Okay.
All right, Prasad, are you back? Can you guys hear me now? Prasad, are you back?
Yes,
You're
yes.
audible.
We can hear you.
All right. So Prasad, I was telling you, assume that you want to sell a car and I have to pay you 6 lakh rupees, right? Now, the problem is, Prasad, I'm afraid that I will pay you 6 lakh rupees, but you will not deliver car at my house. And for you, the problem is, what if you deliver the car at my house and I do not pay you 6 lakh rupees, right? There's a trust deficit. So in order to deal with, we go to HDFC Bank and we open an extra account and we enter into a tri-party agreement wherein, Prasad, you say that I will deliver the car. Okay. I say I will immediately pass on the 6 lakh rupees, not to you, but to HDFC account, which is considered as an escrow account, right? Now, HDFC says that as soon as Sumit you receives the car, I will pass on the 6 lakh rupees to Prasad. That is a tri-party agreement.
Correct.
Right? Now, HDFC is not going to take any ownership over here. When you take an ownership, what happens is that even if I do not pay 6 lakh rupees to HDFC, Prasad delivers car to Sumit, HDFC has to pay 6 lakh rupees to Prasad. That is what ownership means. But why would HDFC bear 6 lakh rupees of expense because of this? So you can only play a role of mediator where your risk is zero. Your risk should be zero. Otherwise, though, all Sumit will come, many Sumits will come and exploit the system of HDFC Bank. And HDFC Bank, why would HDFC Bank give guarantees of Sumit Rathi? Try to understand. And in case if HDFC Bank is giving guarantee, then that's a different transaction altogether. It may happen that HDFC Bank guarantees Prasad that yes, you will get 6 lakh rupees, Sumit pays or not. It's a done deal. When would that happen? When Sumit has kept his home as mortgage with HDFC Bank. For a house which is 1 crore rupees, HDFC Bank will be happy to take a 6 lakh rupees of guarantee. Are you getting what I'm saying?
Correct. No, but is there a tax for the clearing houses as well that they should close a stipulated transaction in a specific timeline or something like
obviously.
that?
Yes. So, for example, the trade happens on day 1. In T+2 days, the trade happens on day 1. The clearing has to happen on T+1 and the settlement has to happen on T+2. So that's a TAT for all the parties together clearing house.
Okay. Yeah. Now I got your point. Thank you so much. Yeah.
So, Miss,
Yes,
one question. What is in it for clearing house? Like, what is there?
Clearing house obviously will get some fee out of it. It would be very limited, but it would be some fee.
Okay. Okay.
Yeah, means 121 million would not go to the hands of seller in this transaction. Though we are assuming zero transaction cost, but 121 million will not go to Fidelity. Somewhere around 120.85 million will go to Fidelity.
Okay.
That 0.15 million is going where? It is going towards the fee towards exchange, because when you do transaction, exchange will take some charges. Some portion is going to brokers. Goldman Sachs will take some brokerage, and some portion will go to clearing house.
Okay.
So it will all inclusive. So ultimately, though Fidelity has sold shares worth of 121 lakh, but they will never receive 121 lakh in its end. They will receive less than 121.
Okay. Got it. Thank you.
And on the other hand, Nehal, it is not the only thing. Though KKR hedge fund is going to receive the shares of 121 lakh, but KKR hedge fund has to, for receiving those shares of 121 lakh, they will have to pay somewhere around 121.15 lakhs, 121.15 million.
Okay.
Right. So buyer has to pay a little extra than actual price, and seller has to will have to be satisfied with the price little lesser than what it has actually sold. So the extra is taking care of all the cost. The cost includes the cost of clearing house, the cost of NYSE, and the cost of brokerage. And one more cost, that is fourth cost, that goes to custodian. That is the third FMU, which we are going to talk about.
Okay.
Custodians are the people, not custodians, sorry, depositories. Sorry, I missed wrong word. Depositories. The third FMU is depository. The third portion of the cost will go to depository. One will go to trading platform, second will go to clearing house, one will go to broker. So total 3. The fourth part will go to depositories. Who are depositories? Depositories are the institutions, central securities depositories institutions are the institutions which hold the securities as in electronic form on behalf of client. Right? So example, you have to open a demat account to hold securities, yes or no?
Yes.
That demat account is opened not with broker. You might be getting it opened through your broker, right? You would think that because when you buy any demat account, when you open a demat account, your broker comes to you. Yeah, I will provide you. But it is not a demat account which he opens. Broker opens something called as trading and demat account together, wherein the ownership of trading account is with broker, the ownership of demat account is with depository institution. So when you are opening a demat account, do not think that I am opening a demat account with a broker. You are actually opening a demat account with a depository, and broker is a mediator in there also. Are you getting what I'm saying? That demat account is an account where your securities in a dematerialized forms are held. Who manages that demat account? Depository institution manages those demat accounts. In India, we have 2 depositories institutes, that is CDSL and NSDL. Central Depository Securities Limited, and NSDL is something. Okay? CDSL is a listed company. Okay. Now, what is their role? The major role of CDSL is to hold the securities in a demat form. Right? So the securities which are getting sold in this transaction of 1 million Apple shares are going to be held by whom? Are going to be held by? You would think that the securities are going to be held by who is the buyer of the security? KKR hedge fund, right?
KKR.
So not KKR hedge fund is not going to hold it. It is going to be held by
custodian.
The clearing house of US. Not the clearing. The custodian bank of US. Depository Institute of US. Actually, there is a mix of role. Custodian also provide these services. So again and again, I'm saying custodian. Custodian also provide this service of holding securities in depository form, but that is only for exclusive for its clients, and investment bank can also play the role of custodian, but let's not mix it. Depositories. What is the role of depositories? Depositories will hold it on behalf of KKR hedge fund in KKR hedge fund of a demat account. Okay. So KKR hedge fund will have to open a demat account with the clearing house of US. Okay. Sorry, not clearing house. Sorry.
Depository.
Depositories of US. Yeah.
Okay.
Okay. Depositories of US. So in India, the depositories are CDSL, NSDL. And India is the only market, or very few market, where there are 2 depositories. Rest all over the world, largely I'm talking about, there is only 1 depository per country. So in US, there is only 1 depository, DTCC. In Europe, there is only 1 depository, that is Euroclear. Similarly, JASDEC. So generally, most of the countries have only 1 depository. In India, there is 2 depositories. One is NSDL and second is CDSL. CDSL is a listed company. Okay. Now, what is the role of these depositories? These depositories allow the investor to hold the securities in an electronic form. It maintains the record of the ownership of the securities in electronic form. It transfers the ownership of one party to another party through a simple entry, that is a debit credit. So in this entire transaction on NSE, NYSE, what you are doing? You are booking the trade, right? Clearing house is doing what? Settling the trade. But ultimately, who is doing the debit and credit? That means Apple shares will be debited from Fidelity's demat account and credited to KKR hedge fund demat account. Who is going to do that?
The depository.
The depository of US. Right? Is it clear?
Yes.
So that is why these are 3 financial market utilities, which mixing these 3, Nehal, will be end-to-end service of securities transfer and purchase.
Okay.
Right? So you first put an order to first FMU, that is a exchange platform. then that order get processed and cleared through clearing house, and then ultimately the securities are credited and debited from one demat account to another demat account by CSD, that is deposit.
Okay.
That is why they are called as financial market utilities. They ensure that this transaction happens very smoothly. Okay. So issuer, investment bank, financial market utilities, then look at custodian bank. But before coming to custodian bank, anyone has any question?
Yes, sir.
Yeah.
Can the depositories and clearing house, can they be the same person?
आपका आवाज नहीं क्लियर, क्या बोल रहा है? If
saying that depositories and the clearing house could these both are the same person?
Yeah, depositories and clearing house can be same.
Okay, sir.
It can be. Not all the countries, but it can be. Any more questions? So basically, a depository can provide clearinghouse services also as a part of its services, because ultimately they have the securities with them, right, in their account. That means that the demat account which is held with them. Any more questions, guys? Anyone? Okay.
No, sir.
All right. Let's go custodian bank. That is a fourth kind of intermediary in a financial market. Custodian bank. Custodian bank is a bank which can act as a custodian of the assets for its clients. It can accept deposit from its client by taking a banking license. It can keep the securities in dematerialized form for its client by taking a depository license. But the difference between a custodian and a normal bank is, if you deposit your cash with a normal bank, Aditya, you will get a 3%, 4% rate of interest, right? If you put your cash with custodian bank, you are not going to get any interest on it.
Yes, sir.
Custodian will not give any interest on your deposit. It only safeguards the asset for the client, not with the objective of giving any interest to anyone. Why? Because unlike a normal bank where deposits are then converted into assets by form of lending, custodian bank do not do lending until unless client asks them to lend it to someone. Try to understand. Because if client asks custodian bank to lend its securities to someone, that is fine. Because it is client who is asking.
Yes, sir.
The securities which is there in your custody, pass it on to XYZ. I will get fee from that XYZ part. That's a different thing. So who a custodian bank? Custodian bank prima facie safeguards the client's assets, not retail client like you and me again. To your dismay, Ayushi, you might find why all the services in the world are for institutions and HNIs, not for us, like, right, Ayushi? But that is truth. Custodian bank services are not for retail clients like you and me. Custodian bank services are for HNIs and institutional investors who have 500 crore rupees lying idle and they want to safeguard it. Ayushi, why don't you think that if you have 500 crore rupees, you will give it to bank a normal bank can generate return, whereas rather than giving it to a custodian bank, think about it. And Ayushi, I've taken your name this 7th time. You haven't still unmuted yourself and talking, so you need to speak.
Yes.
Yeah,
Yes,
you cannot be a
Sumit.
silent visitor over here. It's not a.
Actually, no. Actually, I'm trying to. Actually,
And
there's a
everybody
glitch.
is trying to
So
understand everything. That is fine. Well, that's a cliched
Yes.
reason for not to speak. Okay, that is fine. But you need to remain unmuted. We are talking right. Okay. I'm asking you.
Okay.
What do you think, Ayushi? An institutional investor with 500 crore rupees cash would not give it to a normal bank like HDFC Bank and give it to a custodian bank, wherein normal bank it can earn some interest 1 to 3%.
Might be custodian bank gives more return.
I'm telling you, custodian bank going to give you zero return, no interest, right? I just few minutes back I said that, right?
Yeah.
That proves that you were sleeping. It's very simple, Ayushi Singh. If you put any deposit with a bank like HDFC Bank, for example, you put 1 crore rupees. Today, if that bank is liquidated or if the bank is bankrupt, how much will you get back?
5 lakh.
No.
5 lakh rupees. Because that is guaranteed by government. Government guarantees deposit worth 5 lakh rupees for individuals as well as for anyone, right? So I have 500 crore rupees. I put to your bank and your bank is bankrupted, Ayushi. Forget about my 5% rate of interest. What will happen to my basic principal amount of 500 crore, right? You will just give me 5 lakh rupees. Take 5 lakh rupees, have fun. Hello. I paid you 500 crore rupees and you are giving me 5 lakh rupees. Do you understand the difference between this?
Yes.
First of all, tell me, do you understand how big the amount 500 crore rupees is? Let's understand that. Tell me, which city do you live?
Right now, I'm in Ghaziabad.
Ghaziabad. In Ghaziabad, a 2 BHK flat in good society cost how much? 75.
2 BHK flat. Yes.
In fact, lesser than 75 lakh, right? Maybe 50 lakh rupees you can get if you search well, right?
Yeah, it depends on the societies. Like in the society.
Ayushi, in the 500 crore rupees, you know how many flats can you buy?
Just
1,000 flats. How many flats?
1,000 flats.
So if you have the habit of staying in a flat for a day and go to a new flat, it will take 3.5 years for one flat to repeat, where you will be going for the second time, right? Do you understand how big that amount is?
Yes.
Right. So for that big amount, you are giving me 5 lakh rupees back, Ayushi. Do you think I'm fool to keep that much of cash with you?
Yeah, obviously I don't want to. Yes.
I will not put 500 crore rupees with you, right? I'll put it with the custodian bank. It's not going to give me any interest, but my money is guaranteed.
It's safe.
I will get my money back as and when I want. Right? So that is what, when we say safeguarding, that is the act of safeguarding the asset. You guarantee the money back. Okay. It also helps in safekeeping the client's securities, client's funds, money, cash, everything. It also helps the clients in purchase, sell, trade, transaction on behalf of their client. Right? Some clients are so big, Ayushi, they say, we don't want to deal with broker. I have no time to receive call from broker. Sir, le lu kya? Sir, bech du kya? Sir, ye kar du kya? So they do all this work to whom? Outsource, custodian bank. Well, I have 1,000 crore rupees, Ayushi, but I don't want to manage it personally. I will decide which shares to buy and which shares to sell. I will decide. But I will ask custodian. Custodian ko bolunga, call karke. I will make only one call to custodian. Boss, buy 1 crore shares of Maruti. Okay. How many shares?
Yes.
1 crore shares of
1 crore.
Maruti. Custodian bank will do all the operation tasks. Custodian bank will call on behalf of me. It will call to broker. Buy 1,000 crore shares, 1,000 shares in this account of my client. Then broker will call to custodian bank. Okay, the price I am getting is what? This. You want 1 crore shares. Right now, the quantity available is 1 lakh shares. If you okay, then I go and buy it on your behalf. And like this, if every time he is going to buy 1 lakh, 1 lakh, 1 lakh shares, broker is going to call him 100 times. How many times?
100 times.
100 times to whom? Custodian bank. Why? Because
Custodian.
the rich person who is an owner of 1,000 crore, 10,000 crore, do not want to receive that many calls. You need to understand he's busy doing nothing. Are you getting what I'm saying? He
Yes.
doesn't want to spend time on this. How will he go to parties and all, right? Fun. After having 10,000 crore rupees, also, if you have to receive 100 calls, then what is the purpose of then what is the difference between you and a person who is working at a 20,000 salary in a customer care?
Yes,
Having 10,000
exactly.
crores, if you have to receive 100 calls on daily basis, then what is the difference between you and a customer care guy? Think about it.
Yeah.
Customer care guy is also receiving 100 calls, but he's getting 20,000, 10,000, 15,000, depending on which city, what is the level of English he can speak and all, right? So that is why HNIs and institutions give these operational tasks of settling, getting the trade settled, getting the purchase and trade sales transaction, everything on behalf of their client. They will get it done through that same channel. Why? Broker, then broker going to exchange, then passing it to clearing house, then clearing house passing on the securities to depositors. Through the same exchange is same. Process is same. But who is going to manage it? Not client. Who is going to manage it? Custodian bank on behalf of
Custodian.
On behalf of
Client. On behalf of client.
Yeah. Is it clear?
Yes.
So there are local custodian banks, regional custodian banks, global custodian banks, sub-custodian banks. Local custodian banks are the custodian banks, Ayushi, which function only in one country, right? Regional custodian banks are the custodian banks which have functions in one region. When I talk about region, it's like Americas, which include America, US, as well as Canada, right? Or the region can be Europe, which comprises of what 20 plus countries, whatever you can check online. And region can be Asia Pacific, which covers not only India, but all the countries which comes in the Asia Pacific line, right? So this is a region. Place in more than one country, but not global presence, only regional presence, right? Asia Pacific or Americas or Europe. Global custodian bank. Global custodian bank will be a custodian bank which will having its branches throughout the globe. Okay. Right. And sub-custodian bank. Sub-custodian bank is a bank which provides services on behalf of another custodian bank. For example, Ayushi, you are a regional custodian bank of Asia Pacific excluding Pakistan. You are a regional custodian bank of Asia Pacific excluding Pakistan. Okay.
Okay.
Now I want to buy an asset in Pakistan and keep that asset in Pakistan only, but with your custodian bank. Can I do it?
No.
Why? Because you do not have your custodian bank branch over there, right?
Yes.
But if you say no to me, do you think I'm going to deal with you forever? I'll say, boss, she doesn't have wherewithal. Why would I do work with Ayushi? I will go to some other custodian bank. What kind of bank are you? You call yourself a custodian bank at a regional level, but you do not have a regional presence, right? Yes or no?
Yes.
So what can you do? You can connect with a sub-custodian bank.
Some other bank, yes.
Sub-custodian bank. You will create a sub-custodian bank, not by launching your own branch. Why? Because Pakistan is dangerous now. You don't want to deploy your own branch and your own people. What do you do? You give a license to, it's a franchisee based, right? Someone who is having a custodian bank in Pakistan, you give a license. कि अगर मेरा कोई भी business आएगा, you have to manage on the land of Pakistan. Are you getting what I'm saying?
Yes.
Huh? Right? So that is called a sub-custodian. Is it fine?
Yes.
Anyone has any questions? Tell me.
Sumit, can you give some examples of custodian banks like local and regional as well?
Most of all the banks have a branch of custodian bank, Shang. All investment banks have a custodian bank with them as a separate entity, but they all open a custodian bank. Investment bank itself create a custodian bank for providing services to its clients, because all its clients are institutions and HNIs. So there is an intersection of services. If you see, custodian bank also deal with whom? HNIs and institution bank investors. I'm putting you on mute because there's echoing happening at your end, but you can unmute when you are to speak. Yeah, custodian bank is who? Custodian bank deals with custodian bank deals with which clients? HNIs and institutional investors. Investment bank deals with which clients? HNIs and institutional investors. So doesn't it make any sense? Think about it. If investment banks want to expand its businesses, because it is to deal with HNIs and institutional investors, in all its services, it will add one more service. Well, we will provide you custodian bank services. Why are you going? You are a customer of JPMC. Why are you going for custodian bank services to Barclays? We will provide it to you. We have a separate entity which and we provide in that entity we provide custodian bank services. Are you getting what I'm saying?
Yes, clear now. Clear now.
In India, all of these banks, ICICI, HDFC, all will have a custodian. Right? See, this is a list of registered custodian of securities in India. Citibank, BNP Paribas, Axis Bank Limited, DBS Bank. They create their own custodian bank arm. The only thing is that they create a separate arm, right? Is it clear?
Yes, yes.
Okay. We already talked about brokers, trading members. Investment bank can themselves play the role of brokers, trading members. Clearing members, we talked about, right? Clearing houses and all. Prime brokers, I talked about prime brokers, especially the services of prime brokerage given by investment bank by creating a separate entity to hedge funds, right? Credit rating agencies can be there. What is the role of credit rating agencies? These are independent companies who provide rating to the financial instruments as well as companies which are issuing these financial instruments, right? So international credit rating agencies are Moody's, S&P, Fitch. Domestic credit rating agencies are ICRA, CRISIL, CARE. These are famous credit rating agencies based out of India, right? So their role is to rate the financial instruments which are getting issued, as well as the companies which issue these financial instruments. Data service providers, there are various data service providers like Capital IQ, Bloomberg, Morningstar, Thomson Reuters, Market, Ace Equity, ICE Data, FactSet. All these are the data service providers who provide data, financial data, securities related data to whosoever who wants it, including institutional investors as well as individual investors, but they're expensive. If you want to take service of Capital IQ, it may cost you, I don't know, $1 lakh per annum. So, but you get ready data in whatever format you want and all. Commercial banks ultimately plays a very important role because all these exchange of securities and all requires a lot of flow of money, and ultimately money has to flow from one account to another. That means commercial bank has to be part of all of this, right? So transfer of funds, deposit products. Also, commercial bank provides short-term loan products. Commercial banks also provide foreign exchange transaction services, fund transfer in foreign exchange, transfer money from one country to another country through Nostro account, through customer correspondent banking relationship. So even if HDFC Bank might not have a branch in Europe, but if you want to transfer euro in someone in Europe, HDFC Bank can help you. Why? By engaging into a relationship with Barclays Bank based out of Europe, having a Nostro account in that bank, right? So commercial banks. Then there's called some institute called as ISDA as a market intermediary. It is known as International Swap and Derivatives Association. ISDA's role is to provide standardized documents, because lot of this derivative transaction happens at international level. So citizen based out of US is entering into a contract with citizen based out of Europe. And there can be a lot of problem related to language. Even though both are English speaking countries, still, even if both are English, UK and Europe, sorry, not Europe, but let's say UK. So for example, UK and US citizen are entering into a contract, both speak English, but we know that both the English are different. UK English is different from US English, right? So a word can have a different meaning in two countries. So in order to avoid any confusion and something like that, ISDA as an intermediary comes up with a standardized contract where the language is same for both the parties. So it is a standardization of so they deal with standardization of documentation used in securities OTC market. So then if any party defaults or any party has concern, at least with respect to language, nobody can take an advantage or disadvantage, whichever. Then there are regulatory bodies. Obviously, regulatory bodies are important. So in India, we have SEBI. Similarly, SMR, SEC. SEC is in US, FCA is in Europe. So or UK, I forgot, but yeah, you can check. Yeah. So these are the regulatory bodies who regulates the financial market. And the 13th one and the last one is investors. I already covered this investors, right? Investors and someone who is having surplus money and they want to invest the money for generating returns in the future. And investors can be categorized into three broad categories. One is HNI, second is retail, third is institutional. Any questions? So financial markets, so yeah, purpose, then participants, may issuer, investment bank, exchange trading platform, clearing house, clearing central depositories, custodian bank, clearing members, broker, prime brokers, credit rating agencies, data service provider, commercial banks, ISDA, regulatory bodies, individuals. So sorry, investors, including individuals, retail and institutional. Yeah. Any question, guys? Anyone has any question on this? What we have discussed so far?
No.
Topic which is cash equities, which should have been covered the last Sunday itself, but it is not possible, right? We have to do things in a manner which can be understood by most of the people. All of the people is something which is too much of expectations, I agree, but yeah, most of the people. So any questions, tell me. Okay. If not, then we can start with the next topic with the name cash equities. And as the word equities is into, you can understand it is related to equity market, right? So I'm just giving one more minute for you to gather any questions. If you have, gather your thoughts and ask it. And let me take attendance also so that you can gather your thoughts and ask questions if anything comes to your mind. Yes, Shravani, it is completely legal. OTC trading has no problem. It is a legal trading. We are not talking about that unorganized market which is illegal. I'm not talking about DABA system. If you are referring to DABA system, it is not DABA system which is illegal. It is a purely OTC trading market where transaction happens without an exchange. That is the only difference. And OTC market is, as I told, maybe more than 10 times the exchange market. All right. Prakhar.
Sumit, you are on.
Sorry.
Yeah.
I just realized. Sorry.
Okay.
Yeah. Satyaki.
Yeah, I'm present, sir.
Shweta. Jatikarta. Priyanka.
Present, sir.
Praveen is there. Kamesh Panduranga. Santosh Killari is there.
Present.
Yes, Ravani is there. Jatikarta Karim Nam. Aditya is there. Shashank Raj is there. Anand Kishore.
Yes.
Anand, were you there in the last session? On Sunday? Anand? Hello, Anand, are you there? Okay. Anand is not there today also, right? It's someone else who said yes. Anand, are you there? Hello? Just thought I heard you. Okay, it's my mistake. Okay, Richa?
Yes.
Sujata?
Yes, sir.
Ratnesh Srivastava? Monica Sangode?
Yes.
Yash Ajay Pratap Singh? Okay. Ayushi Singh is there. Subhalakshmi Behera?
Yes.
Prasad is there. Mr. Louis is there. Dixit is there. Rakshanda? Yeah. Pratik?
Yes, sir.
Chandrasekhar Swayan?
Yes, sir, present.
Were you there in the last session Sunday?
No. I was not there. This is my first session today.
All right, great. Abhi baat hua tha, sorry, I forgot. Yeah, Samvit
Yes.
Gupta. Dhruv Sardana.
Yes. I'm here.
Mayank Maldani is there. Chandan Gehlot is there. Surabhi is there. Thanga Shruti is there, I'm sure.
Yeah,
She
hi.
had-
Hi, Sumit.
Yeah, hi. Nehal is there. Kiran Virat. Kiran?
Yes, present.
Were you there in the last session Sunday?
Yes, Sumit. I was having network issue.
Okay, ठीक है. I have marked you. I have marked present. Yeah. Sai Girithar V. Rahul is there.
Present,
Hepzibah is there. Diga Marthi Ramesh Kumar.
Yes, sir.
Arshita Govda is there. Abhinav Kumar. Abhinav. Okay. Saurabh. Shreyas Srivastava.
Present, sir.
Shahnaz.
Yes.
Yeah. Yash Kenya.
Present, sir.
Yeah. Vijay Kumar Raju.
Yes, sir.
Okay. Why you? Okay. Huh. Ritik Kumar. Ankit Sarkar. Shubham Khurana. Mayank Sharma. Sorry,
Yes, sir.
Smriti Seth. Yeah. Smriti Seth. Smriti. Samir Chandrakar. Ritvika.
Yes, sir.
Priyanka Khamkar. Nivedita is there. Nabanita.
Present, sir.
Nabanita's name is twice. Oh, no. Okay.
Sir,
Yeah,
my
have I
name is
missed-
not there.
What's
Sir,
your
my
name,
name
sir?
is
Panduranga Kamesh.
Panduranga Kamesh, you're done, right? आपका हो गया था ना?
Yes, check कर.
See, Kamesh Panduranga, it is your name.
Yes, sir.
Sir, my name is also
Yeah.
not there.
What's your name? Amrit.
Yes, sir.
Amrit to nahi hai. Is it your first session?
Yes, sir.
Name is Amrit Gupta.
Gupta.
Okay. Okay. Have I missed anyone else? Okay. Yeah, Shanaz. Okay, I have marked your attendance. I have marked your attendance. All right. Okay. Who else? Okay. All right. Then we have covered everyone. Let me close this one. Yeah. Have you thought of any questions, guys? Anyone? All right. Chalega. All right, so let's talk about equities, guys. What is equities, right? And some end or other end, we have heard this word, right? I'm sure everyone would have heard this word equities, right? And when we're talking about cash equities, what we're talking about is basically equities in which investors can invest with the claim of ownership. Equities which gives ownership claim on businesses to the investors. And it is one asset class in which all the investors can invest. Retail, HNI, or institutions. Right? But the important point over here is this. The ownership claim is the important. Equities provide ownership claim to investors. That is something which is distributing factor. Which is differentiating factor. Yeah. So what do we mean by when we say ownership claim? Anyone has any thought? What do we mean by when we say ownership claim? Anyone?
Sir, we own that part of the company.
We own a part of the company. Correct.
Government percentage.
But then you are saying that what you are saying, Rahul, is there is a word which is missing is proportional. Right? If, for example, company has total 100 shares, and if you own 10 shares, then you will only own that part of the equities ownership that is equal to 10%, right?
Yes, sir.
So you brought a very important concept. Yes, proportionate ownership claim. Right? It provides us what? Ownership claim to the proportion of the equities we own. Right?
Yes, sir.
Okay. I agree. And what are the advantages of having ownership claim and what are the disadvantages of having ownership claim? Let's talk about it. If you have an ownership claim on any company, what are the advantages and what are the disadvantages? Tell me. Anybody?
If the company is doing good, the price of my security will grow.
So Praveen, we can participate in the decision making, means electing someone.
Voting.
So Praveen, you made a very important point. I forgot, Shruti, what you said because your voice was not that clear. And Nehal, you are correct that with respect
I said the same. Yeah, I said the same.
Oh yeah. So voting rights, correct, Praveen, you are correct. So as an owner, the biggest advantages, one of the biggest advantages is that you get to participate in the decision-making process of the company. Brilliant. And Nehal, what you said is also partially correct, that you have advantages of the upside if companies do good. then the upside of that good, a large portion of that upside comes to owners. A large portion, not all, but a large portion of that comes to owner. I agree. Any disadvantage of owning the company or having ownership rights in the company? Any disadvantage?
Sir, means if you are a owner, if the company incurs the loss, we will not get the benefit out of the profit.
So if company making loss or profit, both ways, Praveen,
Yes,
even if
sir,
company
both
makes
ways.
loss or profit, you would not receive something called as dividend.
Yes,
A
dividend.
regular flow of income, right? That is, and like, okay, so I'll take it two ways, Praveen. Loss, we'll take it separately because you are correct with respect to what you said. So it is 100% correct. But I'd like to add another point to it, that in case of a company make profit, Praveen, even if a company makes profit, it is not guaranteed that you will receive a regular flow of income.
Yes, sir.
That is the disadvantage of being an owner, that even after your company is making profit, regular flow of income the company is making, but you are not being an owner, you are not receiving regular flow of income. There is no guarantee that you receive a regular flow of income from the one. And second, what you said, that in a loss-making situation, which goes to another extreme, that is bankruptcy. In case of bankruptcies, owners will be paid in the last from all the cash which is received after selling all the assets of the company. That is again one of the biggest disadvantage, right? Think about it. If a company goes for bankruptcy, then what happens in case of bankruptcies, Prasad? Think about it. If a company goes for bankruptcy, what happens? Tell me.
All the assets will be sold off and it will get compensated.
Right. So if companies gets bankruptcy, it needs to be liquidated. That means all the hard tangible assets and intangible, whatever it is holding, it needs to be sold in the market. And by that cash, which you receive after selling all the assets of the company, that cash first needs to be used to pay off all your borrowings, all your debt. After paying all your borrowings on all your debt, if you are left with anything, that can be distributed to owners. So owners has the disadvantage to receive anything out of the event of liquidation at the end. And it may happen, Aditya, that in the end, the actually no cash is left. I get what I'm saying. No cash is left.
Yes, sir.
Right. So after selling all the assets, Aditya, you received 100 rupees, but you had borrowers itself of 150 rupees. And you had provided equity of 50 rupees. So first that 100 rupees needs to go to borrowers. Will you be able to satisfy all the borrowers? No. You will be able to satisfy only 67% of your borrowers, right?
Yes.
Even just after completing 67% of your borrowers, you will be left with 0. So is there any chance you can get anything out of that 50 rupees? Because borrowers will get 100 rupees out of 150.
Sir.
Borrowers had given 150 rupees, but they will at least receive 100, right? But would you get anything as in 50 rupees of against 50 rupees of equity investment? Nothing.
No,
because
sir.
nothing
No,
is
sir.
left.
Because they are the first lien.
Yes. So these are the two biggest disadvantages, that you cannot, equities cannot ensure regular flow of income. And at the time of liquidation, at the time of liquidation, your claim to cash flows would be the last. Your claim to the cash flows of the companies would be the last. And it may happen that in the end, nothing is left to be distributed. So, yes. But you know, one more beauty of investing into equity, Shruti, the downside is known. When you invest into equity, Shruti, the downside is known because it has limited liability clause. What is the clause? Limited liability clause. What do you mean by limited liability clause? For example, you invested 50,000 rupees in a company. right? What is the maximum loss you can bear? What is the maximum loss?
50,000.
Only 50,000 rupees. Right? If the company do a default of 1 lakh rupees, nobody is going to come to your house. Hey, Shruti, you were the owner of that company. The company has only 50,000 to repay. The next 50,000 you need to pay. Is the boss? No, I don't have any unlimited liability. Whatever company has taken liability, that is your problem and company's problem. You deal with company. Why? Because company is a separate identity. Company has a separate identity. You deal with the issue with the company. I am only owner with respect to 50,000 rupees, which I have already given to the company. Now, if company has defaulted on 3 lakh rupees, next 2.5 lakh rupees is not my concern. That is your loss. Why did you trust the company? That is your loss. Are you getting what I'm saying, Shruti?
Yeah.
So your downside is what? Your downside is what? Investing into the company. Downside is what? Shruti? The downside is what? I want to hear it from you. The downside is Shruti. Shruti, where are you? Okay, anyone else? The downside is?
So investment value.
The limited. Limited to your investment value, right? Downside is limited to your investment value. But upside can be unlimited, as said by Nehal. If company could do good, the share prices can keep going and up and up and up and to infinity. Who knows? Yes or no? So that is the biggest advantage into equity. But yeah, the disadvantage is also I have discussed. It's important that I talk about advantages only, not only advantages, but also disadvantages, because you know that I am biased towards equity as asset class, right? So that is why I first told you disadvantages and then I told you advantages. Otherwise, it would be a biased view. Okay. Now, with respect to equities, it is largely a capital market product. It is what? Capital market product. Why? Because when a company raises capital in the form of equity, the timeline is always unlimited. Why? Because company is under no obligation to pay your money back. As compared to debt. When a company raises capital in the form of debt, it is under obligation to get the money back to the investor. It has to give back the money to the investor. So that is the biggest advantage. So for example, a company called Santosh Patnaik Industries Limited, SPIL, wants to raise her 1,000 crore rupees, right? Wants to raise 1,000 crore rupees. How many options are there with respect to issuing capital and raising capital? How many options are there?
Three options.
3 options: equity, debt, and hybrid. What is hybrid? Hybrid are the products which are having features of both equity as well as debt. Like convertible securities. So at the time of issuance, they will be what? Debt. But there would be a promise that if you able to achieve this particular milestone, the investor says that if you are able to achieve this milestone in your business in 3 years, we will convert this convertible securities, which is debt, into equity. So that is why they are convertible securities. They are debt securities, but they can be converted into equities. That is a clause for like that, depending on some condition. If company meets that condition, investors will happily convert this debt into equity. If the company doesn't meet that condition, investors will keep this convertible securities as debt only. So It is hybrid. Why? Because it can behave like equity or it can behave like debt, depending on if company is able to meet the conditions which are part of the contract. Are you guys clear on it? So there are three main methods to which Santosh Patnaik can raise capital: equity, debt, and hybrid. Right. Now, if it issues equity, then Santosh Patnaik Industries Limited will be highly Santosh. Why? They will have a full Santosh. Why? Because there is no obligation to give that money back to the shareholders. Right? When you raise the capital in the form of equity, company has no obligation to pay back that money to the investors. It is their choice. If they want to pay back that money, it is called as a process of buyback. But if they don't want to, there is no condition that nobody can threaten them. Right? So that is why Santosh Patnaik, if it wants to go with the issue or raising a capital with a condition that they do not have to give the money back to shareholders, they can then the company can go for equity issuance. For example, company goes for equity issuance. Then first time, if Santosh Patnaik is issuing the securities of raising 500 crore rupees, will it go to primary market or secondary market? Tell me.
Primary market.
Primary market. Primary market, right? Just give me a second now. Just
Sumit has taken a break or something.
yeah, sorry. Yeah, Aditya, I was on a 1 minute break. There was a message from your institute. I had to reply them.
Oh, okay, no problem.
Yeah. So we were at what? So we were saying that Santosh Patnaik is going for issuance of 500 crore rupees to in the form of equity. It has to go to which market? Primary market. Because it is issuing the securities for the very first time. And the company itself is issuing. Even if it is issuing the securities for the second time, still it has to go to which market? Primary market. But then in that case, it will be called as what? FPO.
FPO.
So whenever a company is involved, it has to go to primary market. Right?
Yes.
Yes.
Cool. Okay. Now, it goes to primary market, and if it is issuing the securities for the first time, it will go with respect to IPO. Right? When you are issuing, or issuer needs to issue in primary market, it is called as IPO if it is issuing for the first time. If it is issuing for second, third, fourth time, means other than any first time, it is called as FPO, follow-on public offer. The investors will be obviously retail HNI institutions. Now the issuance can happen at par or premium. The issuance can happen at par or premium. Honestly, no issuance happens at par in today's world. In 1990s, 1980s, issuance used to happen at par, but these days no issuance happen at par. All issuance happen at premium. So in India, sorry, I'm really sorry. This is, I don't know why your institute is messaging me more. I'll just call them and clear it in 1 sec. Just give me. Guys, it will not happen now. I'll extend the session by 10-15 minutes. Sorry for this. Message I just call them and confirm things clearly. Okay, I'm sorry. So almost all these issuance happens at premium only. No issuance at today's date happen at par in terms of equity I'm talking about. And in India, when we're talking about par, Prasad, the price is fixed. The par value of all the shares will always be 10 rupees only. The par value of the share in India will be 10 rupees only. It is fixed. I got what I'm saying. So you would be seeing that the IPO is coming at a price of Zomato का IPO कितने का आया था? The issuance price what?
135.
Listing price would have been higher, but issuance price तो कम होगी कि issuance
72
price
something, 70 to 70.
So 72.
I guess.
So if, for example, it is coming at a price of 72, then the premium value in this is 62. It is happening at a premium of 62 rupees. Why? Because the par value of share of any company at the time of issuance is fixed 10 rupees. I got what I'm saying. Any company, any damn company you pick in India, the issuance price, the par value of the first issue. After that, shares can be broken into pieces and all that can happen. Bonus and all can happen, and split can happen, and that can reduce the par value. But that's fine. Before the split, the first time issuance, when it happens, the par value will always be Ayushi what? 10 rupees in India, right?
10 rupees. Yes.
Right. So premium will be what? Premium will be anything about 10 rupees. So if the IPO price is 1,000 rupees, what is the premium? If the IPO price is 1,000 rupees per share, what is the premium?
990.
990. Brilliant, right? So that is called as premium. So issuance happening at par. If any company is issuing at par, then the issue price per share will be 10 rupees only. Is it clear? In India.
Yes, sir.
Right? So primary market we've done, right? Now, can equities be issued in a private placement mode? Can equity be issued in a private placement? Sorry? Can
Yes, sir.
equity be issued in private placement mode? Think about it.
Yes,
Yes,
sir.
yes.
Right. But then in that case, it will not be a public offer. It will not be a public offer, and retail investors would not be participating in that. If it is happening in a private placement mode, then the issuance will be happening and the company will remain as a private company, and the issuance will be happening to a limited number of investors, including qualitative or institutional investors. At max HNIs, no retail. Is it clear?
Yes, sir.
Right?
Yes, sir.
So this is about primary market. In primary market, the issuance can happen three ways. Sorry. Yeah, primary market, the issuance can happen through the public offering, private placement, or retail placement, retail offering, right? So any confusion so far? Tell me. Surabhi, you have any confusion?
No. What's the third one? Retail placement or right issue? I just got confused.
Sorry. Can you repeat? Can you repeat your question?
No. You were saying that about the three types of placement, like in the primary market. So the third one, was it a right issue placement or a retail placement?
Right issue.
Okay. Thank you.
Okay. Chalo. Right issue. And what is right issue, by the way, Surabhi? Right issue is the issuance of the shares only to the
Existing
customers.
Existing equity shareholders. Right? That's done. Right?
Okay.
Sumit?
Yeah.
I have one question regarding IPO. For example, I have invested in Zomato initial public offering. So what is the assurance that I'll be allocated, or is there any limits to the only amount of this person should be allocated or something else?
आपको थोड़ा धीमे बोलना पड़ेगा निवेदिता, आप थोड़ा आप बहुत फास्ट बोल रहे हो, मैं स्लिप कर जा रहा हूँ, आपको थोड़ा सा धीमे बोलना पड़ेगा, आपको तो बताइए. In the side voice is fine, but थोड़ा slow जाइए. क्या बोल रहे हैं? What exactly is your in case of IPO? Yeah.
Okay, what is the assurance get if I invested in a particular company? So is there any assurance that I'll get, or I may not get like that? Is there any what is that?
You with respect to shares, right?
Yeah,
for example, you applied
shares.
for 100 shares, and will you get 100 shares or not? There is assurance or not? That's what you asked, right?
Yeah.
So there is no assurance. There is no assurance.
Okay.
But the only thing is that your money will be debited from your account only if you get shares.
Okay.
Till the time, so there is a timeline, right? When you apply for it and when company is liable to give you shares, there's a time between that. Okay. The IPO process has some time. So when you apply for it, immediately the money doesn't get debited. But there is a lien which is kept on that money. To that. So for example, your savings account has 1 lakh rupees and you have applied for 15,000 rupees of IPO.
Okay.
Then you would notice that you would not be able to use 1 lakh rupees from your account. You can only pay 85,000 rupees of bill from your account.
Okay.
So your account balance is 1 lakh rupees, but you would be able to spend only 85,000 rupees of your account.
Okay.
On the 15,000 rupees, there is a lien. You cannot use that 15,000 rupees. Yeah. If the share gets credited to you, the money will get debited from your account. If company doesn't issue shares to you, you didn't get the shares, for example, then that lien will get automatically removed within a time period, 10 days, 14 days, whatever it is. And then you would be able to use the 15,000 back.
Yeah. Okay.
Okay.
Sumit, I have a question.
Yes, Surabhi.
Not every private company can go public through an IPO, right? There should be some set of criteria to be eligible for an IPO, right?
So SEBI and companies, regulatory bodies and SEBIs have their criteria which needs to be fulfilled for any company to get eligibility and approval. They need to take approval, right? They have to take approval from SEBI and companies, regulatory bodies and all.
Okay.
Not all the companies can get it.
Okay.
There is a criteria, for example, 3 years of profitability or something. Though it wasn't there, but some criteria are relaxed for startups and new age companies. But then there are other, with some relaxation, there is some restrictions also. So for example, companies like Zomato and all were not allowed to issue more than 10% of their issuance to retail participants.
Okay.
Right. Rest everything go to qualified institutional investors, or what generally happens in private placement, right? That the shares only go to limited number of investors. So, the restriction was there with respect to retail. So with respect to some relaxation, there's some restriction, but yes, there are some criteria which needs to be met for a company to be eligible for issuing shares.
Okay. Yeah. Thank you.
Yeah.
Hello, Sumit. I got a
Yes.
little confused between at par and at premium.
हाँ, मतलब मैं ये बोल रहा हूँ कि कोई भी शेयर का पार वैल्यू जो होगा ना वो 10 रुपीज होगा. The par value of all the shares will always be 10 rupees in India. ठीक है? It is fixed. And if it is issued, if the shares are issued at 10 rupees, then you can say the issuance is happening at par. Right? Okay. And if the shares is issued at any price above 10 rupees, it is at premium. And what is the premium value? So for example, issue price of the share is 90 rupees. Then the premium value is 80 rupees. Right?
Okay. Yeah, now got it. Okay.
So that is the difference between par and premium. And the par value is fixed of each share at the time of issuance. It is 10 rupees.
Okay. Cool.
Yeah. Okay. ठीक है. Then if no more questions, we can move on. Now, once in the primary market share got issued, they need to be listed. If they get listed in the secondary market, then they would be eligible for trading. That means investors would be able to buy and sell and enter into transaction of buying and selling of those shares among themselves, right? Right. But if it remains unlisted, then trading can only happen in OTC market, right? Are you getting what I'm saying?
Yes.
Yes.
Yes,
For example, shares are traded in the form of private placement. Sorry, shares in the primary market are issued in the form of private placement. Does it require to be listed? No. Why? Because public participants are not participating in private placement, right? So they will not get listed. So if they do not get listed, where is this HNI and institutional investors want to sell these shares to other investors? Should they go to exchange or should they go to OTC market? Which option is there with them? Hello.
OTC.
If shares are issued in the primary market in the form of private placement, then obviously they will not get listed. Why? Because public is not participating into it. In private placement, public doesn't participate. So if they and public is not participating, then they will not get listed. So if they do not get listed, the investors who have invested in the private placement, which is HNIs and institutions, if they want to sell it to other investors, they would have to approach exchange They would have to go to secondary market, but under secondary market, will they approach exchange or will they approach OTC market?
OTC
They
market.
have to approach OTC market.
OTC market.
So the importance of OTC market is this, that both listed or unlisted securities can be traded in OTC market, but on exchanges, only listed securities can be traded. Only those securities which are listed will be traded in exchanges. But OTC market, unlisted so will always trade, but listed securities can also trade. In fact, all the big ticket size trading, even in listed securities, happens in OTC market most of the time, as I explained earlier, right? Shashank, do you have any questions?
No. Sorry.
Okay. So in India, if they get listed, there are two options. Shares has to either get listed on NSE or BSE or on both. There are shares which are listed only on NSE. There are shares which are listed only on BSE, and there are shares, enough amount of shares which are listed on both the platforms. Any questions so far? In US, the exchanges where the shares get listed in US market are NASDAQ and NYC. Any questions so far? Tell me. Any questions? Anyone? Come on. All right. If no questions, then go ahead. Let's understand the type of equities. The type of equities or equity products or cash equity products. First is common equity shares. They're also known as ordinary shares, common stock. And in general, if somebody is saying equity shares, 99% he is or she is referring to common equity shares. So what is common equity shares? Common equity shares is the tiniest unit of equity common share capital. It decides the ownership of investor in the company. For example, if company's total value is 100 crore, if the company's total equity value is how much? 100 crore. And if it is made up of 10 rupees per share, if it is the entire capital is broken down into 10 rupees per share, then how many shares will be there? 1 crore or 10 crore? 10 crore shares will be there, right? Per share, 10
Yes, sir.
rupees. 10 crore shares will be there, right? Yes or no? And
yes, sir.
so these 10 crore shares are common equity shares, the tiny units of common share capital. And if anybody owns this share, for example, if I buy 10 lakh shares, how many shares? 10 lakh shares. So what is my ownership in the company? What is my ownership in the company?
1%.
1%. Right? Or we can calculate it like this. Right? So I will be owning how much ownership? So my ownership is how limited to 1%.
1%.
Right? So I will be owner of the company towards 1%. So it decides the ownership of investors in the company. Right? It decides the ownership of the investors in the company. Any questions? Any questions, guys? Come on, tell me. Okay. So some features of the common shares or ordinary shares or equity shares, all of these are same, one and the same thing. Few features. First and most important features is that they have the ownership claim. By owning these common equity, I can claim the ownership in the company. Second, there are some non-financial benefits for being an owner or shareholder of the company. Most important among them, as rightly said by Pradeep earlier, it results into voting rights. Being an owner, you can vote. So voting rights are given to the common equity shareholders. One vote for one share. They can participate in the decision of electing or removing board of directors. They can participate in the decision of electing or removing statutory auditor, or it can be any other important decisions in which shareholders can participate and cast their vote. They have the right to attend the annual general meeting and emergency general meeting. By physically attending these meetings, they can cast vote in AGMs and EGMs. And these days, there is enough possibilities for e-voting, wherein the investors do not need to physically attend AGMs and EGMs. They can attend electronic voting process. In fact, in India, this depositories, NSDL and CDSL, has NSDL and CDSL has a system and infrastructure to conduct electronic voting or voting online. Beyond that, also, an investor who is holding common equity shares can authorize some other party to vote on his behalf. So there's a concept of proxy voting. So being a common shareholder, you get the right to vote on any important decisions, be it electing or removing anyone or the entire board of directors, electing and removing statutory auditor, and any more further important decisions by attending the annual general meeting or emergency general meeting. By physically casting these votes, or they can be make these important decisions by casting these votes in electronic form. And in fact, if they can't attend the meeting or they cannot cast the vote electronic, they can assign or give the authority to someone else to vote on their behalf. Generally, proxy voting is in case of HNIs and institutions who give this right to vote on their behalf to custodian banks, because custodian banks process most of the things for their on behalf of the clients, right? So proxy voting is also allowed. Another non-financial benefits for equity common shareholder is the right to receive annual reports from the company and all the important notices, like notices for AGMs, EGMs, notices for investor calls, notices for regular conference call, or any other important event of the company. They have right to receive all of these from the company. Okay, so these are two most important non-financial benefits which an owner or a shareholder gets by owning the common equity shares. Mind it, these are common shares or common equity shares or ordinary shares of the company we're talking about, right? Third important concept, important feature of common equity shares is that equity capital is permanent capital. As I told earlier also, that if any company issues shares, equity shares, they are under no obligation to give the money back to, shareholders, right? So equity capital is kind of permanent capital. Yes, Harshi, you want to ask any question? Hello, anybody wants to ask any question? I can see you have unmuted yourself. I don't know who it is. Somebody has unmuted. Okay. Then I'll put you. Any question? So equity capital is a permanent capital, non-redemption capital. The company is under no obligation to return the capital back to the shareholders, and that gives a lot of motivation for company to invest it and take risk. Right? Another feature of equity capital, which I already discussed with you, is that equity shareholders have limited liability. The shareholders of equity or common equity, or the shareholders who are holding common equity shares, have their liability limited to the money which they have invested in the common equity shares, not beyond that, right? So the loss is limited towards their investment. That is something which you need to understand, right? So equity shareholders have limited liability. Then another features of equity shares is that equity shares are freely transferable. That one can transfer the ownership of the shares to someone else, right? So basically, because they are easily transferable, they can be sold and bought among the investors without company participating into the entire process in the secondary market. Equity shares can be held in demat account, electronic form, as well as physical certificate form. So largely these days, in the recent era, nobody holds the securities in the form of physical certificate anymore. All the companies issue their securities, even the private players issue the securities mostly in the case of dematerialized format, or what you call as electronic format, by putting these on demat account. Now there are some financial benefits. We have seen some non-financial benefits to the equity shareholders. Let's look at some financial benefits. First is equity dividend. Dividend is nothing but distribution of profits of the company to the shareholders. So whatever profit the company is making, it can be distributed in the form of dividend to the shareholders. But the point is, yes, shareholders are entitled to receive dividend, but it is not guaranteed. So it is at the discretion of the company. If the company making profit and wants to distribute it to shareholders, it can do that. But if company is making losses, and that is why it is not distributing dividends, it's okay. And the cherry on the cake is that from the company's side, if the company is making profit, still it doesn't want to share the profit as dividend, then also it is okay. So would the company be distributing the profits to shareholders in the form of dividend? It is subject to company making profit as well as board of directors approval. Even if company is making profit, but board of directors do not approve of dividend, then the dividends will not be distributed. The profits will not be distributed to the shareholders. So simply saying, company is under no obligation to declare dividends despite making profits. Despite making profits. So there's no guarantee of dividend income, but yes, if the company issues dividend, then yes, it is a financial benefit to shareholders. There's no doubt in that. And dividend can be paid quarterly, half yearly, yearly, interim. Whenever the company wants to pay dividend, it can pay dividend. Second financial benefit, as was lightly said by Nehal, I guess, if I remember, is of capital appreciation or capital gain. When there is increase in the market price of these shares compared to the purchase price of the investors, it results into capital appreciation or capital gain to the investors. When the market price of the shares exceeds the purchase price of the shareholders, shareholders tend to receive capital appreciation or capital gain. But then this benefit has a downside also. Like it can result into capital gain, similarly, prices can go down as compared to the purchase price of the shareholders. In that case, it will result into capital loss. So benefits are not pure benefits. Each benefit has its own advantages and disadvantages. With respect to financial benefit, I'm talking about. The first financial benefit of equity dividend, yes, but it is not guaranteed. Second financial benefit is of capital appreciation, but the opposite is also true. That is, it can result into capital loss as well. And that is why these are risky investments from any investor's angle or from any investor's perspective. Another feature of common equity shares, now we are coming out of financial benefits, we are moving ahead from financial benefits. So another important feature of common equity shares is common equity shares has the residual claim on company's assets. And again, this is something which I told you. When I talk about residual claim on company's assets as well as earning, I talked in perspective of company's asset, not in the perspective of company's earnings, but we can talk about earnings also. But yeah, first let's talk about company's asset. So in the case, when we say residual claim, what does it mean is shareholders have the last claim. So what does it mean? In the case of common equity, if company ever reaches to the situation of insolvency and liquidate its asset, if company ever reaches to the situation of insolvency and reaches to the process of liquidation, common equity shareholders will be provided out of that cash in the end. That is, at the time of liquidation of the company, all the assets of the company will be sold off in the fall and paid in the following sequence. So all the assets of the companies will be sold off, and whatever cash has come to the company will be given to multiple stakeholders in the following sequence. First, preference will be given to secured loan providers. So those people who have provided secured loan to the company, first they will be paid. Then if any cash is left, then that cash will be used to pay off unsecured loan providers. Any person who has, on any company or any bank who has provided unsecured loan to company, that will be paid next. After paying both secured loan holders and unsecured loan holders, if any cash is left, then that cash will be used to pay preferred shareholders. And we are going to discuss what is preferred shareholders in few minutes, because that is the second. But just for the time being, let's consider there's something called preferred share. So the third priority will be given to preferred shareholders. And after paying secured loan holders, unsecured lenders, and preferred shareholders, if anything is left, which is only can be dream, honestly, but still, if anything is left, then can be used, that money can be used to distribute among the common equity shareholders in proportion to their ownership. If, for example, 100 rupees is left and there are 10 equally weighted shareholders, then each will be paid 10% of that cash. So in proportion to their ownership, they will be paid cash. Any question so far, guys? Tell me. Then the last feature which we can discuss is with respect to common equity shares is common equity shares may be listed on exchanges or they may not be. So they may remain as unlisted securities in case when common shares are issued only in the form of private placement or to the limited people. But if common equity shares are issued to general public, then they would be listed. So depends which is the issuance, if it is private placement or if it is whichever it is. So whatever it is, you need to be careful there. Okay, I left one aspect in the 8th point. I will cover that. But before coming to that, let me complete the 9th point. That equity and common shares may be listed on exchanges or may not be listed on exchanges. It depends on what kind of issuance it is and if it is required to be listed on the exchanges. Is it mandated to list on the exchanges? It might not be. So depending on all of those, we will decide. Yeah. On 8th point, I only discussed about the company's shareholders' residual claim on company's assets. Now let me discuss about equity shareholders have the residual claim of assets as well as company's earnings. So in case company is doing good and it's making profit, even in that case, equity shareholders will be paid dividend at the end. So this is how an income statement looks like of a company from so revenue, for example, revenue, then operating cost. After paying all of these, you are left with earning before interest and tax, that is EBIT. For example, a company is making earning before interest and tax of 1,000 rupees. Then out of this EBIT, first interest will be paid. That means first debt holders will be provided, secured loan providers and unsecured loan providers, they will be paid first interest. After paying interest, that what is left is called as earning before tax, out of which tax will be paid. After paying tax, you are left with profit after tax. Now you would think that, okay, this profit after tax now will finally be distributed as dividend to shareholders. Then also you are wrong. Why? Because before paying to common shareholders, this out of this profit, first preferred shareholders will be provided. Now, whatever is left after paying to preferred shareholders, if anything is left, then that money can be distributed as dividend to shareholders, common equity shareholders. So that is why even on earnings, they have the residual claim. Like on assets, in case of liquidation, they have the residual claim. Similarly, on earnings also, they have the residual from the profits. First, the lenders will be paid interest. Then preferred shareholders will be paid. Government will be paid tax, and after that, paying all of those parties, if anything is left, then that can be distributed as a dividend to shareholders. Any questions on these features, guys? The 9 features which I discussed, broad 9 features. I discussed. Any questions on that? Anyone? Come on. Anyone has any questions on that? Tell me. Okay. So am I a very good trainer that I'm able to make you understood everything, or is it just that I'm not doing a good job and then you don't want to ask questions because you anyways are not understanding anything? What is the situation? Tell me. Well, it's a highly surprised not asking.
No, sir, we are getting the
Everything
point.
is clear. Everything.
Yes.
This is right.
Clear,
This is
sir.
mostly a magical. This is a magical event, I would say. It can't happen
No,
like
sir,
that.
sir, there are many
Out of 40
points they already have read, so that's why we are getting the point clear.
Okay.
Okay.
Great. Good. Okay. Now let's talk about some of the risks which are involved in common equity share. We have talked few of these, but let's talk. Biggest risk is market risk. One of the biggest risk is market risk. That is, in market, the share prices of the stocks can go up and down, resulting into the shares which you are holding can have a lot of capital gain or capital loss, right? So you can have a lot of losses because of share prices going down, or you can have a lot of profit, but the downside is something which you need to understand, right? So there is a risk of share price fluctuations because price can go up and down with either side, and it is in no one's control. Second is liquidity risk. That is, if the shares are not listed on the stock, then it can become difficult to really sell the shares. So converting the equity shares into cash can have an issue. Even those shares which are listed on the stock, Prasad, even those shares which are listed on the stock may have lower liquidity or may have liquidity risk. Why? Because they are very small in size and there are very less limited volumes which gets traded in those stocks, that if you are holding a lot of shares of those companies, it would become very difficult to you to sell those shares. Let me give an example. I generally don't use money control. I don't like money control a lot these days, but they have improved a lot in last 2.5 years. So I started, but it's okay if you don't go to money control. That's fine. I honestly don't like much, but yeah. Okay. So, but the point, because there's some information which is there over here only, so that is why, which is available for free. Otherwise, we have some databases where you get all this information. Okay. So, for example, this company called MRF, right? So, if you look at this company, the share price of this company, one share is costing 83,000. Now, in an entire day, yesterday, that is Friday, 29th July, how many shares were traded? Entire day?
12,000.
Only 12,000 shares. For example, if you are holding 15,000 shares of this company, if you are holding by any chance 15,000 shares of this company, and you want to sell all those 15,000 shares immediately, can you sell it?
No.
No, right? Why? Or even if you are able to sell it, then it would result into huge fall in the share price, because the demand is not that high, but supply will increase, right? Yes or no? The demand is not there for 15,000 shares, but supply will be of 15,000 shares, so it would result into excessive supply. Absence of demand will result into share price falling. So even if you would be able to sell it, but your realization would be lower than the market price, which motivated you to sell and book profit, right? The share prices would have reached to an extent where you got motivated. Okay, now I should sell it. So some shares are there where the liquidity is very low. Let me give one more example. Even if they are listed on the stock exchanges, but the volume in which they are traded is so low that if you are holding shares in larger numbers, you would not be able to sell it. Okay, for this the volume is good. Okay, 1,20,000. But it is, if you will notice, if you have the volume chart of last 1 year, you will notice that the volume has suddenly increased. There is some excitement in this stock, and there are some positive things about the stock. I have not bought it. Let's see if we have volume chart. But okay, so volume has fine, good for it. But yeah, right now there are many shares like this where you would have very low liquidity, and because of which it would be difficult to sell the shares, and that impacts the liquidity of the stock even if they are listed. So remember, just this liquidity risk is not only associated with the stocks which are unlisted. Even the shares which are listed may have liquidity problem, because they are traded at a very thin volume, Issuer risk, right? The issuers of the shares can do fraud, mismanagement, enter into financial troubles, business failure. Back to back, whatever decision they are making, everything is getting failed. So there can be issuer risk. Foreign exchange risk. This risk is largely with the investors who invest into foreign equities. So if for example, if you are invested into Microsoft or Meta, you may have foreign equities, foreign exchange risk. Right now, you would not have. In fact, our currencies is going down, so you would have some extra profit out of it. I agree. But then it can turn either way, right? So there is an FX risk, right? Another risk with respect to equity common shares is something which we saw in that financial benefit wala point, that yes, you are entitled to receive dividend, but there is no guaranteed regular income. So dividend will come every year, every fixed interval. It is not fixed. So that is one thing. And the sixth important risk factor is that being an equity shareholder, you get the residual claim both on assets as well as earnings, right? So what if nothing is left in the end? You may end up receiving zero, both in case of assets and earnings. So these are various risk factors which are there with respect to investing into common equity shares. I hope you would have understood it, right? Any questions still? We'll cover preferred shares and other type of shares I guess it's already 8:06. Yeah, we'll cover them tomorrow. But any questions so far? Tell me. Come on. Any questions? All right. Okay. So if not, then if there are some any closing remarks, I would be more than happy. My ears are like to you. And if not, then we can close off the session and enjoy our rest of evening and meet you guys tomorrow. Tell me.
Hi.
Yes, Mr. Raj.
Sumit, you showed just now that platform, I guess, money market or something.
Money control, money control. Yeah.
Okay, so the money control, what I noticed is that if you can scroll down, what I saw is that the company itself is issuing and the bidding and asking price is there, right? The bid
ये वाला?
price and नहीं sir, ऊपर जो था, I saw. Yeah, this here 146.25 and 153.10, right? This is the bid and ask price, right?
ये आप इसका बोल रहे हो 144 and 151?
No. The right side of the volume, if you could see. There is volume there.
ये वाला, okay.
So it is mentioned by the company itself, right?
No. Company has nothing to do with. It is with respect to buyers and sellers.
Okay.
This was the broad range in which the trade happened during the day. All these shares were traded between this range.
Okay, so
And
if I
at the end of the day, share price got closed at 149. Right.
Okay.
So this bid and ask keeps on changing throughout the day. So if I click on it, you will see that at different price, there were different offers. So all this bid, if you remember, I gave an example of exchange where it is an auction based process, right?
Yes.
This is what it is. This is what it is. There are sellers. For example, this is giving a detail of 5 sellers, right? 1, 2, 3, 4, 5. There are 5 sellers. One seller is ready to sell 1700 stock at a price of 153.
Okay.
One seller is ready to stock sell 500 shares at a price of 152.50.
Okay.
One seller is ready to sell one share at the rate of 152 rupees. One seller is ready to sell 100 shares at the price of 151.95. There is another one seller who is ready to sell one share at the price of 151.00. These are the different quotes given by sellers that we are ready to sell these many quantities at these respective prices. Similarly, on the other hand, there are buyers quote where there is one buyer who's ready to sell 500 shares at the price of ready to buy 500 shares at the price of 148. Or there is one buyer who's ready to buy 22 shares at the price of 150. Right? So and so forth. So these are the various bid price and these are the various ask price. Now, can trade happen? Trade can only happen if anywhere the prices match. For example, the seller who wants to sell 100 share at the price of 151.95, seeing that there is no buyer at that price, again change his quote from 151.95 to 150.30. Suddenly the order will match up to not 100 quantity but 22 shares. For 22 shares of this person will be sold immediately because there is a buyer ready to buy at 150.30, 22 shares.
Okay. Yeah, I'm not getting it.
Like this, the trading happens. And right now, these are looking static, but these are not static. These are dynamic. But because the market is closed, this is the at the moment of 3:30. What would have been the situation that is getting captured? Now at 9:15 on Monday, you will see again these numbers fluctuating.
Okay.
It remains dynamic. The sellers keep on changing the quote, and buyers keep on changing the quote, and whenever there is a match, trade happens.
Okay. Thank you so much.
Yeah. Company is not at all involved into it. It is a secondary market where company has no role to play.
Okay.
Yeah. Any more questions, guys? Interesting. Any more questions?
No.
No? Or yes? But if no, then Neil, you want to ask questions or you said no or yes? I forgot. Sorry, I didn't hear.
I said no.
No, okay.
All my
All right.
questions were like answered in the second.
ठीक है, Miss Priya. Yeah, Shruti, go ahead with your doubt.
Yeah, so now the bid is 146.25 and ask is 153. So will the order is not matched, right? So no trade would happen now. Will trade happen or not? Yeah.
No, at this quote, the trade can never happen.
Okay.
Try to understand this is closing at Friday's 3:30. Whatever the closing situation is getting captured over here. And anyways, the trade cannot happen. Even say try to understand right now the secondary markets are closed, so trade cannot happen.
Okay.
The markets are open only Monday to Friday, 9:15 to 3:30 for equity trading in India.
Okay.
Okay. So if you will go to this site at 9:15 Monday, you will find that these prices are fluctuating, and all of these right now, which is looking static, will become suddenly dynamic.
Okay.
Within a blink of your eyes, the prices will keep on will be completely changed.
Okay.
It's a continuous process. Seller will keep selling the price, buyer will keep giving the price, and this and this and this. This will keep happening throughout the day from 9:50 to 3:30. It's a madhouse. Right? Right now at 3:30, whatever the situation, market suddenly closes.
Okay.
When it at the closer of the market, what was the breadth of the market is something which is given to us. That at the end of the market, these many orders remain unsold or unbought. Because if they would have got bought, then they would not have been coming in this list. Because buyer would have got what he wanted, seller would have got what he wanted or she wanted. Right? These remain untraded or non-traded. Open positions. That yes, there were these many sellers who were standing to sell at these respective prices, these many quantity. On the buy side, these many buyers were remain standing in the market to buy these many shares at these much respective prices. But it couldn't happen. Why? We can see that why, right? Because no price is matching.
No price. Okay.
As soon as the price match, it will anyways go out from this table. The trade will execute.
Okay. Okay. So, thanks.
Okay. Okay, guys, any more questions? No. All right, then let's close today's session. Let's meet next tomorrow evening. Yeah.
Thank you, sir.
Thank you so much.
Thank
Bye,
you.
sir. Thank you, sir.
Thank you. Bye. Thank you. Do read that article which I shared with you guys. It's
Bye,
interesting.
sir. Thank you, sir.
Thank you. Bye.
Bye, sir. Thank you, sir.
Bye, Prateek.
Thank you so much. Thank you so
Thank
much.
you so much.
Thanks, Priyanka. Thank you.
Thank you, sir.
Thanks, Amrit.
Thank you, sir.
Thanks, Dixit.
Good night, sir. Thank you.
Good night, sir.
Thank you, sir.
Thanks, Kamesh.
So how can I get the notes of class?
Yeah, notes I will share within once I complete, some sustainable amount of things where it makes some sense to share notes. Whatever I'm showing on the screen now, I will share the entire file with you.
Sir, actually, the recorded version of yesterday's class was not uploaded. I think.
Yesterday, you mean to say Sunday's session?
Yeah,
Recordings
on the
are not
Sunday.
available?
Yeah, no, sir.
Check with coordinator. Check with coordinator. They will be able to help you.
Okay.
Right? They will provide you the path where it is uploaded, or I guess it is uploaded on your LMS portal only, but you check with coordinator.
No, I just checked for the last 3 days I'm checking it is not uploaded yet. That's why I asked.
Just come directly coordinate with coordinator. They will help you immediately.
Okay. Thanks a lot, sir.
Okay.
But Amrit, don't worry. I will share this file also with you, but some sustainable amount. Let me complete and then I'll share, right?
Yeah, sure.
Okay.
Okay, thanks, sir.
Thanks, Satyaki.
Thank you, sir.
Thanks, Praveen. I hope your meeting was good.
Yes, sir. Yes, sir.
Good? Great.
Yes.
Okay.
Thank you, Sumit. Great learning.
Thanks, Mr. Raj. Thanks.
Sumit, actually, I have a question to ask you.
Yes, Mayank, please go ahead.
There was some doubt regarding the trade itself. Like you were telling me about something asking and some question ask and bid price, right? So I have a question about that. That if someone is coming in a buyer which is buying a whole lot of that day, like which is putting a share on upper circuit, right? So the next day will that buyer can buy another lot also after on
Yeah,
the
so
next day?
buyer can keep buying as many shares he wants to buy. Like,
okay,
for example, today you ordered for 10,000 shares. Okay, for a share which is thinly traded. For example, daily only 1,000 shares are traded, and you put an order for 10,000 shares. Obviously, it would result into jumping the share price like anything, and your orders will not be fulfilled. And then there will be circuit. Okay. So you will find that share will undergo circuit where trade cannot happen.
So there can be a dealer also who is buying the shares for someone.
Yeah. You can have dealers as we discussed, right? Brokers can buy shares, dealers can buy. Anybody. All the parties are readily available. See, within the boundaries of the market regulations, anybody can buy.
Okay.
Largely, you will find that when these kind of large ticket deals has to happen, it happens off market. First, it decided on off market because these are called as bulk deals, right?
Yeah, I was aware about the off market, but like I was not aware about this thing that if the market, like I have seen some shares which are going for 2 to 3 days, like for upper circuit. So I was asking about that, and I can see that there is one guy who is buying whole shares of that day. So like I was not aware.
Sometimes it happens, right? Some investors get highly positive on the shares at the right time and he start buying, and in a thinly traded shares especially it happens. So you know, all these small cap, you would find that when they go for upper circuit, they keep on going for upper circuit for 5 or 10 days, and right, because they generally are thinly traded, but some good event has happened, or maybe it is rumor, whichever ways, it can result into incremental price every day.
Okay, sir. Thank you so much.
Yeah.
Bye.
Bye, man. All right, guys. Thank you. Thank you all who all are left. Thanks a lot.
Thank you, sir.
Thanks, Ritvika. I'm ending the meeting for all. Bye. Good night.
Yeah.